Good evening and welcome to the December 6, 2021 regular meeting of the Mayor and City Council. First item on our agenda is the Pledge of Allegiance. I'd like to ask Councilmember McNulty to lead us in the pledge tonight.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you very much, Jim. Next item on our agenda is reflection, and I'd just like to call for a moment of silence, please. Thank you all very much. Next on our agenda is the election of a council vice president. And since we don't have a current sitting council vice president, as council vice president Sesma ended his tenure last month, I'm going to turn it over to Ryan to lead this discussion.
Mr. Mayor, it is my honor and pleasure to move to nominate my friend and colleague, Councilmember Neil Harris, to serve as Council Vice President for the coming year.
Thank you. Would someone like to second that? Rob Wu.
Ditto. Oh, sorry. It would be my honor and privilege to second Councilmember's motion.
Well done. I will call the roll. All in favor say aye. Any opposed say nay. Councilmember Spiegel.
Aye.
Councilmember Wu.
Aye.
Councilmember McNulty.
Aye.
Councilmember Henderson.
Aye.
And Councilmember Harris.
Aye, thank you.
All right. Congratulations. You are now Council Vice President Harris.
Thank you very much.
Thank you, Neil. So next on our agenda is the approval of minutes. And tonight we have 6 sets of minutes. This is a rather, for minutes section of an agenda, this is rather complicated because a number of them are from 2018. 3 of them are from 2018, and then 2 of them are from 2021 before Lisa and Jim were elected, and then the final one, November 15th, everyone could vote on. So I'm going to go in order, the chronological order here, and we'll go to the regular session held on August 6th. I see Neil's hand. Go ahead, Neil.
I'd like to move approval of the minutes from the meeting of October 6, 2018.
August 6th. Neil, you're on mute.
Did I not say August? I meant to say
Is it
August.
October?
Oh, that's the next one. August 6, 2018.
Okay, so I will call the roll. All in favor say aye, any opposed say nay.
Wait a minute. We need a second.
Oh, that is true. Yes, we do. Do we have a second, Ryan?
Sorry to interrupt, Mr. Mayor. Yes, I second.
Yeah, okay. All right, it's hard, keeping all this stuff straight is quite a thing here. Okay, Doris, please.
My
You're on
apologies. That's the meeting Neil was, came in late after the minutes, but he was present. Lynn, he came in at 7:42, so he can still vote on those.
He can still vote on it because he was present for most of the meeting.
Okay.
Yes.
Okay, all right, so we have a motion and a second. I will call the roll. Council Vice President Harris.
Aye.
Councilmember Henderson.
Abstain.
Councilmember McNulty.
Abstain.
Councilmember Wu.
Aye.
And Councilmember Spiegel.
Aye.
Okay, so that carries 3-0 with 2 abstentions. Council members Henderson and McNulty. Next set of minutes is, excuse me for a sec, from Monday, October 1st, 2018. What is the pleasure of the council? And this one, Ryan was absent. So Neil, go ahead.
I move approval of the minutes of the meeting of October 1st, 2018.
Okay.
Second.
Okay, Rob has seconded. I will call the roll. Council Vice President Harris.
Aye.
Councilmember Henderson.
Abstain.
Councilmember McNulty.
Abstain.
Councilmember Wu.
Aye.
And Councilmember Spiegel.
Abstain.
Okay, so that carries 2-0 with 3 abstentions. Council members McNulty, Henderson, and Spiegel. Next, Bear with me a sec here. November 19th, 2018. What is the pleasure of the council? Neil, please.
I move approval of the minutes of the meeting of November 19th, 2018.
Okay, Rob.
Second,
All right, I will call the roll. Council Vice President Harris,
Aye.
Councilmember Henderson,
Abstain.
Councilmember McNulty,
Abstain.
Councilmember Wu,
aye.
and Councilmember Spiegel.
Aye.
Okay, so that carries 3-0 with 2 abstentions, council members McNulty and Henderson. Next, we have the minutes from October 11th, 2021 work session. And what is the pleasure of the council?
It's someone else's turn.
Rob,
Move approval, Mr. Mayor.
okay? Ryan,
Second.
okay, we have a motion and a second. I'll call the roll. Council Vice President Harris,
Aye.
Councilmember Henderson,
Abstain.
Councilmember McNulty,
Abstain.
Councilmember Wu,
Aye.
and Councilmember Spiegel.
Aye.
Okay, carries 3-0 with 2 abstentions, council members Henderson and McNulty. Next, we're almost there. This was October 11th. Okay, so now we have the minutes from October, the regular session on October 18th, 2021. What is the pleasure of the council? Neil,
I move approval of the minutes of October 18th, 2021.
thank you. Do we have a second? Ryan,
Second.
okay, I will call the roll. Council Vice President Harris,
Aye.
Councilmember Henderson,
Abstain.
Councilmember McNulty,
Abstain.
Councilmember Wu,
Abstain.
and Councilmember Spiegel.
Aye.
Okay, so that carries 2-0 with 3 abstentions, council members McNulty, Henderson, and Wu. Next, we have finally one everyone can vote on. The minutes from the special session on Monday, November 15th. What is the pleasure of the council? Jim,
I will give everybody a break and I will move the resolution to approve the minutes of the special session dated November 15th, 2021.
okay,
I
please.
second.
Okay, I will call the roll. Council Vice President Harris,
Aye.
Councilmember Henderson,
Aye.
Councilmember McNulty,
Aye.
Councilmember Wu,
Aye.
and Councilmember Spiegel.
Aye.
All right, carries 5-0. Thank you all very much for bearing with us and getting through all these minutes. Next on our agenda is appointments, and tonight we have several appointments and reappointments. What is the pleasure of the council? Neil Harris.
I move that the resolution to approve your appointments to these committees, to the Animal Control Board, a 3-year term for Mary Jo LaFrance expiring December of 2024. The Commission on Landlord-Tenant Affairs, a 3-year term for David Melt as an alternate landlord member expiring December of 2024. The Cultural Arts Advisory Committee, a 2-year term for Patrick Optitz expiring December 2023. The Ethics Commission, a 3-year term for Donna Dixon expiring December of 2024. The Gaithersburg Parks, Arts and Recreation Corporation, 3-year terms for Mary Fehlig, Tracy Rouleau, and Richard Stang, all expiring December of 2024. And the Police Advisory Committee, a 2-year term for Joshua Fisher, expiring December of 2023.
Thank you, Neil. Do we have a second? Rob Wu.
Second.
Okay, I will call the roll. All in favor say aye. Any opposed say nay. Council Vice President Harris,
Aye.
Councilmember Henderson,
Aye.
Councilmember McNulty,
Aye.
Councilmember Wu,
Aye.
and Councilmember Spiegel.
Aye.
All right, carries 5-0. We shall thank everybody as we see them. And I will remind everybody, as I always do, that serving on a board, commission, or a committee for the city of Gaithersburg is a great way to get involved, learn how the city works, provide meaningful feedback to the mayor and council on issues. I highly recommend it. And there are about two dozen different committees and commissions that probably fit most people's tastes in terms of what they're interested in. So I hope you'll consider it. Now we're going to move on to presentations. And I would like to ask the tech team to bring up Kim Francisco, our Director of Finance and Administration. We're going to talk about our auditor's report. Janice Hartman, Comptroller, Dan Kenny, partner from Cohn Resnick, and Fala Vasilis, sorry if I screwed that up, manager from Cohn Resnick. We've had Fala up here before, so I should be better with that last name.
Giving Fula a chance to get her camera on.
Welcome, everybody. Kim, I'm going to turn it over to you.
Okay. Mayor Ashman and members of the council, tonight we're here to share the city's FY21 audited financial statements with you. Our external auditors from Cohn Resnick are also here to provide you with required disclosures and to share information with you about the audit process. I would like to first highlight that this was our second virtual audit, and much of the success of our audit is attributable to the electronic records that we are able to maintain in our financial system. The pandemic required us all to pivot in many ways, and moving towards more paperless record keeping has been beneficial for the department in many ways, including this one. You may also have noticed that the name of our financial statement has changed from prior years. The previous acronym for Comprehensive Annual Financial Report, spelled CAFR, took on the sound of a derogatory South African slur. It has since been replaced with ACFR, ACFR, for Annual Comprehensive Financial Report. This is a change that you will see across nearly all government entities in this round of financial reporting. So I wanted to share that with you if you hadn't noticed. FY21 brought with it ongoing challenges as we continue to navigate the uncertainties of the pandemic, including limited programming, class capacity restrictions, and unemployment concerns. While the outlook improved as the year continued, there were still revenue impacts. Despite these challenges, the city showed strong financial performance in FY21. The governmental funds ended the year with a $2.6 million net increase to fund balance. The general fund, the city's primary operating fund, showed an increase in fund balance of $11.2 million. Much of the FY21 financial performance is reflective of significant pandemic relief grants from the federal government and strategic operating decisions made by management. The OPEB trust showed strong investment returns and increased its net position by $7.7 million. We will be conducting a contribution study for the OPEB plan in the next few months, and we will share that information with you at that time. I'll pause to take any questions that you have on the city's FY21 financial performance.
Any questions? Comments? Okay, go right ahead, Kim.
Okay, I will hand it over to Dan Kenny and Fula Vasilis from Cohn Resnick.
Okay, good evening, Mr. Mayor and council members. Once again, I'm Dan Kenny, partner with Cohn Resnick, and with me is Fula Vasilis, Senior Manager, here to present the June 30, 2020 audit for the city of Gaithersburg. We're going to go over 3 documents included in your packet. The first is the independent auditor's report that's included in your annual comprehensive financial report. Then we're going to go over the internal control report. And then Ms. Vasilis will go over those charged with governance. So I'd like to pull up packet page number 92, please. And this is the independent auditor's report. So Kim, tell me when I go.
Tech team, you working on that? Thank you.
Okay. All right, thank you. Okay, so this is our independent auditor's report, indicates that we've audited the entity for as of and year ended June 30, 2021. It discusses management's responsibility for the financial statements and the auditor's responsibility, and our audit was conducted in accordance with two standards: government auditing standards and generally accepted auditing standards. And we believe the audit evidence that we've obtained is sufficient and appropriate to render an opinion. And in our opinion, the financial statements are presented fairly. Next page, please. And this is known as a clean opinion or an unmodified opinion. And the next items in here, the RSI, this refers to your management discussion and analysis and your OPEB liability information. And then also there's a paragraph discussing the other information in this financial report. Next page, please. And the next page, because the audit was done in accordance with government auditing standards, this discusses that particular letter. So could we please now go to packet page number 188? And once again, this is the internal control report over internal control report over financial reporting and on compliance and other matters. Next page, please. Two areas included in this report are internal control over financial reporting and compliance and other matters. And you'll note in the third paragraph that it indicates that we did not identify any material weaknesses. And then if you go into the compliance and other matters, the last sentence indicates that the results of our test disclosed no instances of non-compliance. Next page. And this identifies the purpose of the report. So now I'm going to turn it over to Ms. Mastro-Basilis, who's going to go over those charged with governance.
Hi, everyone. I'm going to go to packet page number 192. And you can see that this is the cover page, and beginning on packet page number 193, we begin by speaking to what financial statements are included in that we have audited, as well as what our professional standards are with relation to general accepted auditing standards and government auditing standards. So the communication is split up into a few different sections. The first section identifies significant audit findings. Within this section, it does speak to management's responsibility for the selection and use of appropriate accounting policies. And as Kim mentioned earlier, the city did adopt GASB number 98, the annual comprehensive financial report, of which has been reflected in the financial statements as of and for the year ended June 30, 2021. There were no other initial selections of accounting policies or any changes to any significant accounting policies for the year ended June 30, 2021. And all significant transactions have been recognized in the financial statements in the proper period. The next section talks to accounting estimates, and I'm just going to go over a few of the most sensitive estimates affecting the city's financial statements. They include depreciation expense, which is based on an estimated useful life of the related assets, management's estimate of the net other post-employment benefit or OPEB liability and related deferred inflow and outflow of those resources, which are based on the actuarial valuation report, management's estimate of the accumulated vacation leave, which is recorded as compensated absences in the financial statements, which are based on payroll reports. And at the top of packet page number 194, it speaks to management's estimate of the allowance for doubtful accounts, which is based on past experience of collections. All of these estimates have been evaluated for reasonableness in relation to the financial statements as a whole. There were no difficulties encountered in performing the audit, and There were no corrected or uncorrected misstatements that were identified as a result of audit procedures that were corrected by management, either individually or in the aggregate, to each opinion unit's financial statements taken as a whole. There were no disagreements with management. Management was requested to represent certain management representation that was dated in a letter on October 29th, 2021. There were no other consultations made with any other independent accountants, and there were no other audit findings or issues that were outside of the normal course of our professional relationship. At the top of packet page number 195, we go into the other matters section. In this section, we speak to certain procedures, certain limited procedures that was applied to the management discussion and analysis and the required supplementary information, which include the schedule of changes in the city's net OPEB liability and related ratios, which are all consisted in the required supplementary information or RSI. Our procedures consisted of inquiries of management regarding the methods of preparing the information, comparing this information for consistency with management's responses to our inquiries, the basic financials, and other knowledge we obtained during our audit of the basic financial statements. We did not audit the RSI and do not express an opinion or provide any assurance on the RSI. We were engaged to report on the combining and individual non-major fund financial statements and the general fund budgetary comparison schedules, which accompany the financial statements but are not RSI. With respect to this supplementary information, we made certain inquiries of management and evaluated the form, content, and methods of preparing the information to determine that the information complies with accounting principles generally accepted in the United States of America. We compared and reconciled the supplementary information to the underlying accounting records used to prepare the financial statements as a whole. We were not engaged to report on the introductory and statistical sections, which accompany the financial statements but are not RSI. Such information has not been subject to auditing procedures applied in the audit of the basic financial statements, and accordingly, we do not express an opinion or provide any assurance on it. This concludes the communication with governance. We would like to open it up for any questions that anyone may have for myself or Dan.
Thank you so much, Fulo. I appreciate your work and Dan as well. And congratulations to Kim and Janice and to the entire department. You know, there's really two things you look for in an auditor's report. One is a clean, unmodified opinion. Two is the assessment. I'm trying to think of the auditor language for this, that there's no deficiencies in internal controls, and both are present in this report. That's what we wanted, and that's what we got. And appreciate the hard work of our finance department for getting us there. Again, we'll go to Neil Harris.
So thank you for the presentation and for the report. It's very clean and understandable almost entirely. There's one page I had a question about, if you don't mind getting a little bit into the weeds. Could the tech team bring up packet page 170? This concerns some of the fund balances. The table on this page is divided into the top half of general fund, which is pretty straightforward. The bottom half, the numbers seem to take very large swings, especially from last year to this year, from the assigned and designated into the committed. It looks like categories are being consolidated. Can you explain what the difference is between these categories and why the numbers look the way they do?
Yeah, so I'll start, and then Kim, you should probably jump in. So there are specific categories for fund balance as noted in those certain areas. And I also believe there's a footnote that specifically defines what's in those particular categories. So Kim, I don't know if you have that off the top of your head, like what packet page number the detail is on those.
I don't know how much it's spelled out in the audited statements. I can try to look for that, but I can tell you that we performed a comprehensive review of all of the commitments and assignments of fund balance this year. And we found that there were some items that were noted as being committed or assigned, and it wasn't quite the right category based on the legal. It really comes down to some legalese. So in the past, you can see that there were some balances that were assigned. And what we took a look at specifically with the forestry fund and with the stormwater fund, we looked at the level of restriction, whether that came down from the state. So then that would be considered, what's the right term? Fula, jump in, because I'm trying to think of a certain term that comes out of the GASB. But because that imposes a requirement on the city, it's an external imposition to meet certain stormwater and certain forestry requirements. We did an evaluation and said, you know what, we think those are actually committed based on the language and some of the legal technicalities. So Council Member Harris, you're right that there was a change in presentation based on those factors.
And just to jump in, Kim, on packet page number 126, it does go into detail about what Kim is actually explaining. And there were certain things that were interpreted, and it gives you a definition of what specifically would be categorized within those buckets. And I think a little bit more scrubbing came into fruition this year with relation to if litigation, maybe legislation has changed over the years, or an interpretation of the legislation might have been potentially misinterpreted. So all of that was kind of, as we were digging into it this year, we sat down and kind of really did a scrub of everything. Since forestry was kind of one of the more highlighted items, we decided to do that similar type of process on all of the fund balances for the current year.
All right. I appreciate the explanation. It does. The swing was certainly notable. Very large numbers moving from one category to another. But do we really have $92 million of committed funds? That just seemed like a lot for a city this size.
Let's see. I'm gonna open up the packet page. If we do. And I think that might also, Fula, I don't have that. We dropped the page off the screen.
On 170.
170.
So, right. It's actually page 126 of the PDF. But committed fund balance are basically amounts that can be used for only a specific purpose. So, and the things that were normally grouped in committed balances were related to, and Kim, correct me if I'm wrong, the encumbrances with relation to each of the funds. So, and when we were going through that analysis, we really dug down deep and saw, okay, what balances were actually committed for a specific purpose that would be truly committed, and what would be legally restricted, meaning like there is a legislation that would lean it more to a restricted line item.
Look, I understand everything you're saying. It's just that the number seems like a lot. So at some point, I'd love to see a breakdown of what's been committed and for what purpose, but we don't have to do that right this minute.
Okay. So you can see that on the face of the financial statements. So if you go to packet page, let me scroll up. Packet page 112. That's where you'll see in the Stormwater Management Fund, in the Capital Projects Fund, you'll see those commitments, 45.9 million, 27.3 million, 19.4 million. That's where you'll see the breakdown and the allocation at the fund level. Now, the non-major funds, those are going to be grouped together. That's the housing fund, the forestry fund, and the asset replacement fund. But those three columns make up that 92 million, see that 92.7.
And what also might be helpful on note 11, it actually goes into detail, and I think it's packet page number 142. It actually breaks it out by section, but it also gives you what's included within that section. So you can see that this one shows what's included, what type of programs are included in restricted, what type of programs are included in committed, and what type of programs are included in assigned. And you can use this similar note from last year to kind of compare where things landed from last year and how they were regrouped for the current year. So note 11 might be helpful with relation to the comparison piece of things.
All right, that's very helpful. Thank you.
All right, any other questions or comments? Not seeing any. Well, then we thank you all very much for the presentation. And again, congratulations to our staff for a clean audit report. To the public, this means that to the best of everybody's professional knowledge, opinion, work, the numbers that we present to the public about the financial state of the city are accurate. And that's what you want. So Kim, any final words?
I just want to thank you all for your time this evening. I want to thank Cone Resnick, and I want to thank the entire finance team.
Excellent.
Okay.
Excellent. Thank you all.
All right, good evening.
Hi.
We will move on to our next agenda item, which is public comments. This is the time the mayor and council would like to hear from anybody who'd like to speak on any topic that's not a public hearing topic. Tonight we do have one public hearing, so if you're planning to speak about the adequate public facilities ordinance, that will be next. But for now, if you have anything else that you'd like to speak about, tech team, if you could play the instructional video, that would be great.
Good evening. If you've connected to the meeting tonight via Zoom and you're on a desktop or a laptop and you wish to make a public comment, we can't currently see or hear you. What you need to do, please, is wiggle your mouse around and look towards the bottom center of your screen. You should see a raise hand button. Go ahead and click on that now for us, please. Alternatively, if you've connected in via telephone, you can press *9.
So if anybody would like to speak, use the Zoom raise hand function. We ask that you state your name and address or neighborhood for the record. Keep your comments no more than 3 minutes. Do we have any speakers tonight under public comments? And I see one. Tech team, if you could bring up Amanda Shepard, please. Amanda, just unmute yourself, state your name and address or neighborhood, and go right ahead.
Hi, can you hear me?
Yes.
So I live in 310 Hidden Forest Court. That's in the Hidden Creek subdivision. And I'm very grateful to live in Gaithersburg. And one of the things that is new in my life is I'm new on the board there in our complex. And I guess when I was campaigning, I learned about several illegal boarding houses. And I'd like to know what the city can do to help us with that, because it contributes to quite a few, well, parking for one, but they're dangerous in other respects.
Is that all you got, Amanda?
I also have something else. On my street, the public works team came and they sealed all the cracks. And it looks, I mean, the cracks are sealed, that looks fine, but it looks pretty bad. Is that how you guys are gonna leave it?
Anything else, Amanda, before?
That's enough for now.
Okay, all right. So I thank you very much for the testimony. I don't see any other hands up, so I'm just gonna address these two issues. For the first one on the boarding houses, I'm going to suggest that you send a note to our neighborhood services office. Kevin Roman is the contact, Kevin.Roman, ROMAN, at gaithersburgmd.gov. And as far as the street repair, I would suggest you talk to our Public Works Department. The person I would contact there is Tony Berger, the head of our Public Works, Anthony.Berger, BERGER, at gaithersburgmd.gov. And if you have any trouble getting in touch with anybody, feel free to send me a note or any of the council members, and we can help get you answers on these. Appreciate your service to your community. It's often said that being a member of the mayor and council is a thankless job, but it's really not. But being an HOA board member, that's a thankless job. And but it's really important work, and we appreciate it. And our doors are open to you. So please feel free to send us notes anytime we can be of service to you. And with that, I'm not seeing any other hands, so I'm going to move on to our joint public hearing. And tech team, if you could bring up the planning commission, that would be great. And while we're doing this transition, I will just note that this public hearing is about our adequate public facilities ordinance and some proposed amendments, mostly to restore what is a fee that would go to the schools in the case of overcrowded schools. If we're approving new developments, we don't have the authority to levy this fee on our own, but we can sort of on behalf of Montgomery County levy their fee. And since they now have a fee again, this is our discussion about getting that language back into our adequate public facilities ordinance. I'm sure Rob Robinson and John Schlichting are going to say it a lot better than the way I just said it. It's going to be a lot more understandable. So Rob and John, I'm turning it over to you guys.
Tech team, packet page 199, please. Good evening, Mayor and Council and Planning Commission. I am John Schlichting, your Director of Planning and Code Administration. And this is a joint public hearing on a proposed ordinance to amend Chapter 24 of the City Code, specifically on the article entitled Adequate Public Facilities, most often referred to as the APFO. Concurrently with this public hearing, staff will be presenting for introduction the draft regulation to implement and administer the Gaithersburg MCPS utilization premium payment fee, which is referenced in the ordinance and is listed on the agenda as item A under ordinances, resolutions, and regulations. By way of background, our APFO was last amended in 2015, and that amendment included the establishment of a Gaithersburg, Montgomery County Schools Facilities Payment Fee intended to help fund school construction in districts with overcrowded schools. The fee could be charged to residential developers building units in areas where a school or schools was projected to exceed 105% capacity at 5 years from approvals. The city has the legal authority to charge this fee because it was based on a fee that the county was already charging, the Montgomery County Schools Facilities Payment Fee. The fee had to be used to alleviate school overcrowding within 15 years. The ordinance included waiver provisions. Regulations were drafted for its implementation. Shortly before we were about to put these regulations in place in the fall of 2016, Montgomery County eliminated their school facilities payment fee, which removed the city's legal authority to charge our fee. Fast forward to 2020, when Montgomery County once again updated their subdivision staging policy, which is now called the 2020-2024 Growth and Infrastructure Policy, or GIP. This update included the reinstatement of a similar fee to the one eliminated in 2016, which is now called utilization premium payments. This new fee also reinstates our legal authority to charge a similar fee, which is why we were here before you tonight. I will now turn it over to Long Range Planning Manager Rob Robinson to begin the presentation.
Thank you, John, and good evening, Mayor, members of the council and the commission. I'd like to start with some legalese. This is the joint public hearing on text amendment CTAM 9110-2021 that it addresses instituting the Gaithersburg School Facility Fee under the Adequate Public Facility Ordinance. This hearing was advertised on the November 18th and November 25th, 2021 issues of the Washington Post and posted on the city's website on November 18th. There are currently 10 exhibits in the record. The individual exhibits may be reviewed, and any objection to receipt of any exhibit should be noted prior to the closing of the record. Otherwise, they will be deemed received into evidence. And with that, next slide, please. So to begin the presentation, just a quick overview. Once again, the city of Gaithersburg and its residents are basically served by 6 various high school clusters. This sort of lays out geographically where they are. Next slide, please. And building upon what John had mentioned, in 2020, the county council approved a subdivision staging update along with abolishing moratoriums there. And to be clear, tonight's public hearing does not address the moratorium question. We are retaining the 150% utilization moratorium. As John mentioned, the up fee is not applicable in the city. However, its establishment allowed us to reinstitute. And to begin this process, we had a work session with the mayor and council on September 13th, where staff basically laid out the bones and received sponsorship for the proposed ordinance. Next slide, please. So in short, there's a number of things the proposed ordinance changes do. The first is it changes an incorrect reference to the late Article 66B to a proper land use article reference. It adopts the county utilization standard and seat deficit tiers to establish the fee to be charged. And as was discussed during the work session and included in the packet with a memo from Deputy City Attorney Johnson, this is a state requirement. We have to use, in order for us to charge a fee, we have to use the methodologies and the rates established under the county. So we also adopt the tiers payment percentages, and we change references throughout to specifically reference the up rather than the old school facilities fee. Next slide, please. Further, the APFO changes include a change to the city manager's adequacy determination date from July 1st to the first business day of August. As we mentioned during the work session, this allows us to use the final educational CIP numbers and projections. When we did July 1st, at times we had to use the draft, and we did in fact have to come back other times and amend it a month later once we got the final numbers. So this just allows us from the start to use the final numbers. It also requires the adoption of regulations related to implementing the fee. And as John mentioned, we will also be discussing the introduction of the regulations with this. It defines exemptions from the code section. It establishes a new effective date for the collection of the fee, which would be based upon the timelines, March 1st of 2022. And it establishes conditions and findings required to grant waivers. Next slide, please. So I'd like to sort of highlight with these ordinance changes some of the important facets that aren't intuitive, and also to show how we address comments received from council during the work session. So with the fee tiers, again, as I mentioned, we must use the county standards. The important thing to note is the tiers are based upon both utilization and a seat deficit. This is important for a number of reasons. Technically, you could have a school that is at 136% utilization, but for a high school, but if it has less than 243 seat deficit, it is not tier 3, it is tier 2. This sort of plays in this duality and when we did the findings for the various waivers. So everybody needs to keep in mind, tiers are based upon not only a percentage, but also a seat deficit. Next slide, please. So the rates, we have to use the rates. And really, it's based upon the percentage. The percentages are the actual rates. We have to use the county. And this is what sort of gets charged to or applied to the underlying school impact tax amount that would be charged. One thing to note as highlighted here, a school can pay multiple tiers, multiple rates. So for example, if you are in the Gaithersburg cluster and your children, go to your development would go to Rosemont, you're going to pay both a tier 3 elementary school facility fee and a tier 1 high school facility fee. So this sort of builds in so that it can be compounding depending upon where you are. Next slide, please. So you may ask, well, what's going on? Included in the packet was a memo from Planner Eby. We actually went through, and should this be adopted, these are the schools and the associated tiers. I see some stuff got clipped off, but orange is, I believe, tier 1, red is tier 3, and the yellow is tier 1, and the orangish is tier 2, and the red is tier 3. These are the schools that are currently meet both the capacity and the seat deficit thing. So again, we have a grand total of 3 high schools, 6 elementary schools, and of note, no middle schools meet either of the standards. So for the rest of this year, no fee would be applied to any school development that's serving by a middle school. So next slide, please. So one of the questions that was asked during the work session was related to exemptions, and in particular, enterprise zone, opportunity zone, and MPDUs. There is in the packet a separate memo from Deputy City Attorney Johnson addressing the legalities. And in short, we sort of have to follow the exemptions of the county, but we can add additional exemptions if we so choose. I'd like to make note through the rest of this discussion, and as was mentioned in my memo to Council and Planning Commission, everything we put in was written in the most restrictive way possible. This is so, should there be discussions and you wish to loosen something, we can make changes to the ordinance without need of a public hearing. So important, the county exempts MPDUs, therefore we must exempt MPDUs. But where this comes in, workforce housing is not exempt. So we have not written in that we exempt workforce housing. Opportunity zones and enterprise zones are not exempt under the county, and we have held to that. So, the city fee would be applicable to housing developments and opportunity and enterprise zones. And to have a cutoff on effective date, we have that residential projects, dwelling units receiving final site plan approval before March 1st, 2022 are exempt. Next slide, please. So waivers, the other question really wasn't so much the waivers. These are a holdover sort of from 2015. The council directed us to develop findings, related to the waivers, so they don't seem arbitrary in their application. So again, a project may seek waiver from the fee and or the moratorium. And the findings, again, were written in the most restrictive fashion so that all findings must be met in order to grant a waiver. And even the way we crafted the findings were written individually in the most restrictive way possible. In order to grant any of these. Next slide, please. So just as a brief, in order to be even considered for a waiver, a project must meet a minimum one of the following conditions: that the project is a council priority, that it proposes 30% or greater of fee simple affordable housing at 15% MPDU and 15% workforce, or that the residential development contributes land, funding, or actually constructs a public or charter school. Next slide, please. So onto the waivers. For the most part, all the waivers are standardized throughout. The school one has 2 unique ones that I'll discuss at the very end. So the first waiver finding that we came up with is that the students generated would not result in an increase in tier fees for any school level. So basically what that means is if you're a tier 1 school and you're seeking a waiver, the potential students generated shouldn't push that school into tier 2. That if you're looking at granting a waiver of the fee or whatever, it should be that it maintains in that same tier. Next slide, please. The second one is that no more than one associated school level has tier 3 status. So again, as we sort of mentioned here, tier 3s, reflect the largest capacity issues and the greatest seat deficits. It's obvious then that there's a need for action to address multiple schools, which the fee can contribute towards. And further, a waiver should be denied with 2 or more schools being there. You're just compounding an issue. So that was really staff's thinking with this. is again, if you're already bad, a development shouldn't make matters worse. Well, even if they make matters worse, they shouldn't be absolved of getting paying the fee. Next slide, please. So the project is not exempted for payment of the Montgomery County School Impact Tax. So this is sort of related to the enterprise zones and the opportunity zones, because enterprise zone properties are exempt from the Montgomery County School Impact Tax. Sort of the thinking with this, and as mentioned in my memo, is if you bring in a development and, for example, hypothetically, let's use Lake Forest Mall, which at the master plan is supposed to bring in 1,600 units, but it's in the enterprise zone, you basically have the opportunity to introduce large amounts of housing that would have no financial mitigation, knowing that they will have impacts onto schools. So that was where staff's thinking was with this, that if you already aren't paying the county school impact tax, you shouldn't be able to not pay the school facility fee. There, you do have an obligation for some sort of mitigation. Next slide, please. So no more than one school level is greater than or equal to 150% program capacity. You may be asking yourself, well, Rob, didn't you cover this with you can't have two schools in tier 3? This is where I was talking about the difference with tiering is the seat deficit. This one is just a straight capacity finding, regardless of what the seat deficit is. So once again, it goes but to the same argument. If you're at this level or greater on multiple levels, there's a lot of underlying issues that in many ways can only be served through a CIP construction funding issue or something along those same lines. Next slide, please. So this slide was not presented this way, so I'll walk you through it. This is with schools exceeding 150% capacity. What we said is the projected students generated by the development would not further increase capacity by more than 2% for an elementary, 1% for middle, or 1% for high school based upon the planned capacity 5 years in the future. So those percentages aren't based upon the existing, the existing enrollment that we know is over 150%. It's really based upon, what the school is designed to hold. And what is sort of cut off here is that the intent of this was to limit the number of new students in each permanent classroom that would likely be generated by a project, while at the same time creating a feasible, allowing for a feasible project. So what this chart really shows is we looked at the 3 largest schools at each level in the city of Gaithersburg. And 2% for Brown Station, equates to, 15 students or a new student for every 2.5 rooms. Now, to bring this to reality based upon the current student generation rates in an infill area, that equates to 90 townhomes. You need 90 townhomes to hit 15 students. So this is where we were saying we were trying to balance the needs, that if we wanted to look at something, we can't make it so restrictive. Well, it shouldn't be so restrictive that it becomes meaningless. We might as well just, not have a finding or a waiver for it. So there is the ability to develop, but we're limiting the stresses upon the school. So 2% for elementary schools because they're typically lower, the 1%. So again, for Gaithersburg High at 1%, that's 24 new students. That's an additional student for every 5 rooms. But really that equates to 206 townhomes. So hopefully that lends some context to this. And obviously this is, very restrictive. We're happy, discuss other percentages, but we just didn't want to throw a blind number out without giving it context to actual impacts in the classroom. Next slide, please. So F and G, this slide and the next is related to the contributions for construction of a school. And what we wrote here is that the individual value of the land dedicated or the money contributed or the projected construction costs would not be less than the total estimated amount generated by the collection of the fee. So once again, this is, really to ensure that there's proportionality and it prevents sort of a symbolic action, oh, we're going to give you 1/8 of an acre. You can't build an elementary school on 1/8 of an acre. We want to make sure that what you're doing financially is commensurate over time with what the fee would have been. Next slide, please. And for G, oftentimes, as we've seen before, we've seen projects try to create consolidations potentially with adjoining properties that may not be part of the project. And what we want to do is ensure that any land dedication is substantive, and that it ensures the consolidation. So we want to have something that's in a recorded agreement or conveyance obligating all the lands that are proposed to facilitate the school. So once again, for F and G, the goals of staff in creating these findings is that you have the ability potentially to actually construct a real school. And again, that it's not just symbolic actions. So overall, next slide, please. So that is, a real overview of the ordinance itself. And as John had mentioned, we want to jump into the regulations just because they're so tied into the ordinance. Much as we discussed during the work session, they're composed of 6 sections, as you can see on your screen. Next slide, please. So the intent, obviously, to ensure that new residential development provide for phasing or staging of development that assures adequacy of public school capacity. Next slide, please. The applicability, it just basically reaffirms the ordinance requirements. It's taken from that. Next slide, please. Definitions, we just clarifies, some of the terms that are used within the regulation. So it's a one-stop shop. Next slide, please. Now getting into the meat of the regulation. So procedures. This section defines how the fee will be implemented yearly. The fee rates will be established by City Council with the adoption of the budget fee schedule. On the first business day of August, this goes back to pushing that city manager's memo. We will establish for the following year, schools projected to exceed 150% of program capacity, which schools exceed both the utilization and seat deficit standards. The fee tiers and rates assessed per applicable school level, and what tier will apply to individual schools that are subject to the fee. This will look much like the memo Planner EB submitted into the packets. Next slide, please. The tier rates that are going to be used to calculate the fee will be established at either schematic development plan or preliminary site plan approval. And why did we choose this? Well, this is both preliminary subdivision. So from Montgomery County Public Schools perspective, this is when they bake in student generation numbers going forward with their program. So it's sort of assessing the tiers now as the world is, 5 years, and then it gets to stay in place. Both these plans do not expire. So, the tiers established at this level stay at this level. So basically what we're saying is if you have a development project at SDP, we're going to say, hey, your elementary school is a tier 2 school, and that stays. The calculation will be established at final site plan approval, and will identify those residential blocks that are subject to the fee using the rates established. So in a big picture, and I believe in Kirk's memo, we give you an example of how this would work. So at SDP, the Planning Commission would be notified, or the council would be notified at approval that this project has a tier 1 high school, and that currently the rate for tier 1 high school is 33%. Over time, as it comes within final site plan, however it comes in, whatever the impact tax funds are, for simplicity's sake, $100, that's when we actually calculate the amount of money, and that gets made a condition at final site plan. So this sort of reflects the real world development of phasing. And again, part of the reason we did this instead of pushing everything to the end is we consistently hear from the development community, they like to know what's going on. This helps them build in their pro formas. This helps them develop their projects as they move forward because it provides certainty. Next slide, please. So for amendment to final site plans that include new residential units, the individual tier rates by school, everything will be calculated at that final plan stage for AFP. So we will go through all of this stuff. Not only is it, but it doesn't recalculate the already vested residential units that were under the previous final site plan. It's only the new units. Next slide, please. Oh, so the last bullet I mentioned, we actually pay at the issuance of building permit. So again, somebody will have to come in, they'll have their condition of final site plan, and they will pay a building permit much as, they pay their impact taxes at building permit. So the next section is administration. This section establishes how the fees collected are to be saved and used. It's going to be held in a dedicated account, as Director Francisco had mentioned. The monies collected are not considered revenue. The interest earned, however, remains in the account with the same use restrictions as everything else. Next slide, please. So use of the account. The monies may be used for those capital MCPS capital improvement projects that are in year 2 of construction that increase student capacity at the subject schools. Right now, what we're saying is upfront, portables and project planning shall not receive city funds. However, in years 6 to 8, these can be considered by the council. Interest earned may be used for any school CIP project serving the city of Gaithersburg that increases capacity. So what the first bullet really means is, as the council may remember during the work session, the reason we have to identify the schools is that money under the state law, and as expressed in the legal memos we provided in the packet, provide the rational nexus. So the monies collected for those schools have to be used for those specific schools. There's no sharing amongst clusters or various elementary schools. Next slide, please. So what we're discussing, and we have had meetings with Montgomery County Finance about this. Montgomery County will submit its request no later than November 1st, requesting the city to transfer monies for the following fiscal year. And disbursements will be identified each fiscal year as part of the city's budget process. So really the way it works is, and this goes into the 2-year, we have all experienced where we've seen a project identified in the construction program, but it hasn't begun yet, and then it disappears the next year. In fact, the Crown High School has been bumped back twice. Going back, Rachel Carson, we've seen it with Dufif, where it's there. So part of the reason we are holding the funds till year 2, if you're in year 2, you're actually building something. You're not just saying, hey, we're going to build something. It's actually being built. So it's just a safeguard for us. Next slide, please. So money's not expended. Again, this is a legal restriction that if not expended within 8 years from the date of collection, it must be returned to the current property owners of the dwelling units whose address was used in the calculation of the fee. Review of unexpended fees will be conducted annually on July 1st and will be dispersed by December 1st. But however, again, as I mentioned, interest earned remains in the account. There is an additional memo in your packet from Director Francisco. A question was raised by council at the work session of whether or not these returns are considered taxable income. It is Director Francisco's opinion they are not. However, with caution, we always recommend that should you get a nice substantive check at some point, consult with a tax professional just to make sure. Next slide, please. So waiver provisions. While the ordinance lays out the context and the findings, the regulations sort of lay out the process. So it must be a written request received prior to SDP or preliminary approval by the council. The waivers will be granted as many by resolution with or without conditions. And the regulation also lays out rescission provisions for both the applicant and the city. And again, what that basically means is somebody receives a waiver and then an applicant, 2 years down the road goes, I'm not going to do this. So, or the city determines you're not going to do this. So this allows us then to come back and rerun all the calculations at approved at final site plan. So next slide, please. So also similar to the rescission is the change of plan and validating the basis for the waiver prior to site plan approval. So again, if we grant the waivers at SDP, as we've seen before, a developer may change their plan in certain ways that don't warrant an amendment to the SDP or preliminary plan, but can move on to final. And again, the regulations lay out that the city council may revoke by resolution the granted waiver based upon the changes. And once again, all 3 stages, establishing the tiers, the rates, and the payment amount, will be done at final site plan. Next slide, please. So that is a lot. I went through it. Much of it is the same as we heard during the work session. So what staff is recommending is that the Planning Commission hold their record for the text amendment until 5 p.m. Monday, January 10th, 2022, with the anticipated recommendation January 19th. By one motion, staff recommends that the mayor and city council hold their record open on the text amendment until 5 p.m. Monday, January 24th, with anticipated policy discussion February 7th, which would then allow the effective date of March 1st, 2022 to stay in place to begin collecting. And then by separate motion, staff recommends that the council approve the introduction of the draft regulations without need of a public hearing and accept comments until 5 p.m. Monday, January 24th, 2022, with a final action vote on the resolution for the regulation on February 7th, 2022, also allowing us to maintain the March 1st. Again, I know it was a lot of information. I know there was a lot of information in the packet, but we are happy to answer any questions.
Rob, thank you very much for the presentation. Yes, this is very dense. I feel like there could be PhD level classes just on our APFO. In fact, just on this section of our APFO. But I appreciate you walking us through it. And I recognize that a lot of the complication has to do with us trying to mirror the fee and tier structure that the county has implemented. I'm going to open it up for questions, comments from the council and planning commission. We'll go to Ryan first.
Thank you, Mayor. Bearing in mind that we had a detailed work session about this and that this is not a policy discussion tonight, I'm going to try and just sort of focus on specific questions. And some of this may be a little bit redundant of some of the things that were mentioned in passing during the presentation, but I think it's important to underscore for the public. The first is that this fee regime or system does not apply to any existing residences, right? It's only an application for new development, right? And
Yes.
I know that among us, that may seem like an obvious point, but given that it was advertised as an amendment to the APFO and that we're talking about fairly significant fees, I just want to make sure that members of the public understand that. So it only applies to new development. And I think you mentioned this towards the beginning of your presentation, Rob, but what we're talking about has no impact on moratoria or capacity caps or any of the other elements of our overall adequate public facilities ordinance in the city, correct?
That is correct, sir. The whole focus of this was just to be able to reinstitute the fee from 2015.
Okay. And fair to say that with the possible exception of specific waiver language, that the way that we are implementing the fee, the calculation of the fee, the categories, all essentially mirrors the county's law that is already in place.
That is correct. The tiering, the seat deficit, the utilization standards, the percentage rates, and the underlying impact tax amounts by dwelling unit are all in row compliance with the county.
And so as of the snapshot of the current moment in time, everywhere outside of the boundary of the city of Gaithersburg, if somebody were to start a development project and it were to meet these definitions, they would have to pay the UPP fee to the county as of right now. That's already in place at the county, correct?
I believe so, yes. It was approved and it should be implemented now, and they would be paying the exact same amount. So from a development standpoint, it is an even playing field for development, residential development within the city or within the county.
Right, and that's something we discussed back when we implemented the previous facility fee in that previous incarnation, was that it would essentially create a level playing field between development happening inside the city and development happening everywhere else in the county that was already baking in and paying that previous fee. So now you've got kind of the same situation, right? Where development everywhere else in the county is already baking in the payment of this fee, but it doesn't apply in the city yet, right?
The up fee legislation explicitly, including the county code, explicitly excludes the municipalities.
Does that mean that there are other municipalities in the county,
Rockville.
right? Rockville.
So, and we had reached out to Rockville, and Rockville has not made a decision yet on how they're going to address a school facility fee. They've just completed some other master plan stuff, so they are beginning to look at a comprehensive or substantive ordinance rewrite. So, they may be taking this up in the next year.
So other than Rockville, all the other smaller municipalities in the county, this would already
Pay the
apply
up
to
fee.
them. Right. Okay. So did Rockville previously, I don't know if you know this on the top of your head, did they previously incorporate the old facility fee?
I believe so, because when in 2015, when the city updated its APFO, you may remember soon after, Rockville made a decision just to buy into and adopt the county standards at that point.
That's what I thought, yeah.
And I believe that did include the fee at that stage.
Okay. All right, I think those are the, one final question. You went into quite a bit of detail about how findings for waivers might work, but prior to those slides, you talked about how from a legal analysis perspective, there were certain things we were not allowed to make as exemptions, like workforce housing and other things.
Moderately priced dwelling units, we can charge for workforce housing.
Right. You can make an exemption for moderately priced dwelling units.
Yes, we must, because the county exempts moderately priced dwelling units. And now the ordinance, the specific section cites the section of the county code that lays out its exemptions. A lot of the housing, it's really only MPDUs that would be applicable within the city of Gaithersburg. The three other housing types are more geared towards things that occur in Montgomery County, but we felt it safer just to do a cross-reference to the broader section of that code than to try to list specifically any exemptions. And again, we exempted anything that has, based upon the process now that's been laid out before you, anything that has final site plan approval before the effective date.
Okay, yeah, I take your point, but my question where I'm going is a little bit different than that.
Okay.
So we've got sort of two different categories here. We've got exemptions and then we've got waivers, right? And so I guess your earlier slides were basically saying, here's certain things that we have to exempt or things that we are prohibited from exempting. And then moving into this sort of second series of slides, you were talking about, here's all the findings that we would require in order for the council to decide that a waiver applies. I just want to double check and sort of make it clear for the public and for us that the waiver process and all the findings that we're proposing here are permitted in line with the county's fee plan. Even though there are certain things that we're not allowed to exempt, these things that, these standards that we put forth for the waiver would be allowed under the county's plan. Right?
That is correct.
Okay, all right. Okay, thank you. And most of that was just sort of for the benefit of the public to sort of take these pieces apart a little bit and make that clear. So thank you very much. Appreciate it.
Thanks, Ryan. Any other questions or comments before we go to the public? We'll go to Lisa.
Hi, Rob. Thank you
Hi.
for the presentation. Excellent, complicated, but you make it easy to understand. So thank you. My question is about once a fee is utilized and a school development happens and the school is annexed or expanded or for additional capacity, how are those tiers? What's the process of reassessing the tiers? So if a tier 1 school gets additional capacity.
So each year within the educational facilities master plan from Montgomery County Public Schools, Montgomery Planning reruns all of these numbers. So this is why it's sort of a moving target, and why I discussed that we like to establish the tiers at the preliminary subdivision level, because again, they will use, MCPS uses those development numbers to sort of bake in student generation for the upcoming CIPs. So again, we'll track, part of this will be the luck of the draw. I know we're going to have situations, to be upfront, where somebody will approve an SDP and they may phase it and they may not come in for the first final site plan for 2 years. And at SDP, they showed a tier 1 school. And by the time they come in for final site plan, it could be out of the tiers altogether. But from us, we're not going to change that. When you came in, this was the tier you were. This is how stuff got baked into the ongoing CIPs moving forward. So we're going to establish it. The worst that happens, candidly, is we collect the fee, and if they never need it, it gets returned to the property. So it's, and we get to keep the interest to use for other things. It's going to be very challenging and provides a lot of uncertainty if you begin trying to time year-to-year CIPs on when you establish stuff. So does that answer your question?
It absolutely does. Thank you. Because the complexity was concerning to me, but you've answered that. Thank you.
All right, any other questions or comments? We'll go to Jim.
Thank you, Mr. Mayor. Rob, thank you for the presentation. Thank you for kind of front loading some of the questions that I had, particularly on the moratorium. Thank you for clearing that up for myself and for the public. And I really appreciate the real world possibilities of using Lake Forest as an example. That was definitely one of the concerns I had over the past year, knowing with the passing of the master plan that it resided in an enterprise zone and an opportunity zone. The possibility of adding so much housing without adding funding for adequate schools. So I appreciate the clarity there and how that would work. I was hoping you could talk a little bit more about some of those possibilities of the exemptions, particularly where 30% of affordable housing is a possibility for a waiver, but it needs to be in a certain area. One of the concerns I have is, just making sure that a developer doesn't do what happened with crossings, where you ended up with a development that ended up bringing more affordable housing into an area where we were trying to get more market rate, and just making sure that a developer doesn't do an end around, basically.
Sure, and I'm going to bring Kirk Eby in on this. If we could go to package page 209, just to provide context. Oh, there we go. Cool. So it's a twofold. So as Councilmember McNulty noted, it's 30%, and as I mentioned, it's 15% MPDUs, 15% workforce. But we also have in the provision that it's in a U.S. Census tract in which the median value of owner-occupied units is above 50% of the median value of housing for the city, and then it must meet the findings. And this is where Kirk comes in. I believe Kirk had done an analysis, and of all the census tracts serving the city, I believe development could go into all but 2 census tracts. Is that correct, Kirk? And if so, do you know the relative geographic sense of where those census tracts where this would not apply are?
I believe that's correct. I don't remember exactly off the top of my head. I think one of them was west of 270, and I think maybe the other one was east of 270. It's a pretty low threshold to meet the 50% of median value of owner-occupied housing. So one that I do remember did not meet it is the census tract where the Potomac Oaks condominiums are located, and it's primarily because almost all of the housing units in that census tract are the Potomac Oaks condos, which because they're smaller units and older units, they tend to sell for less, and they tend to be valued less than newer units. They are offset a little bit by the townhouse community that's over there, but basically that's one of the examples of where the median value of that census tract is below the 50% of the city's median value. So you would not be able to take advantage of this, this waiver within that census tract. So that's one example. I can't remember where the other one is, but certainly staff can produce that map and provide it to the council if they're interested in.
We will have that for the follow-up. Thank you, Kirk. That was the technical. The more simplistic is, if you can't meet this threshold, most of your housing already is affordable. It really doesn't warrant necessarily adding more programmatic affordable housing into that tract. It may need investment to actually raise up that housing values, as opposed to continue to depress them artificially.
Great, thank you for clearing that up. And a question that popped in my head while I was listening to your presentation, just in looking at how those numbers are projected, is you talked about the number of units that it would require to generate X number of middle school students versus just as a new guy question, but where are those projections come from? Is that something that comes from MCPS? And if so, are those ever audited to see, how accurate those kinds of projections are?
So as part of the growth policy, there was many complaints, including from our staff and our council, oftentimes in the past, about how they did things. Essentially now, with the subdivision staging policy update, or the JIP, as it's now referred to, all of this stuff is going to be looked at every 2 years. So they've really changed the stuff. So we're going to sort of be tracking, and this is where the fluidity of potentially rates or the underlying fee amounts per housing type could also be looked at every 2 years, reflecting, how they move, how the needle has moved related to student generation rates.
And just to clarify, those rates are based on, existing enrollment and existing housing units. So it's not like they're looking at trying to predict in the future what's going to happen. They're looking at what's happening right now and what's being generated right now. Or I guess every 2 years they'll be doing this little exercise.
That's great. One of the questions that I have just with this post-COVID world is how are, housing setups going to be changing? How are people going to be, moving? Are they going to be moving into bigger houses, smaller houses? And how is, how are those older projections going to fare as people are changing the way they live? So it's good to hear that there's going to be a little more, accuracy in how that number is addressed if they're addressing it every 2 years. Thank you. That's all.
Thank you, Jim. Rob, I see your hand, but I saw Phil's first. We'll go to Phil and then Rob.
Thanks, Mayor. Rob, a couple quick questions. I want to make sure I'm right in my head here. SDP approvals do not expire, correct?
SDP, schematic development plans, and preliminary plans in Euclidean zones do not expire.
So when you were responding, I think it was to Ryan's question earlier about, we're establishing a fee, we're establishing the tiers at SDP to be assessed at final. To me, the sort of nightmare scenario is not that a school that was in tier 3 gets an addition between SDP and final and suddenly we have money we have to get back. To me, the nightmare scenario is a school that was in tier 1 when the SDP was approved. By the time, maybe a developer sits on it, maybe there's an economic downturn and you come 5-6 years later and there hasn't been construction and suddenly that school is at a tier 3 and we've got a deficit of money to fund that. And so that, I think, is the worst case scenario. I'd much rather give a developer back because MCPS has built a school and we don't need their funding than to be in a situation where a developer actually saves money by sitting on something. And it's been a while since I've gone through this process at the county level, but my recollection is it's either at the concept plan or schematic plan, they had a 60-month expiration on approval where you lock in your APFO capacity for exactly that reason. And so that's sort of my first comment. My first concern is that, fine, the SDP doesn't expire, but there should be a reevaluation of the fees assessed whenever we hit the threshold of the projections at the time. So if MCPS's projections are good for 5 years, at 5 years from approval, there should be another look, I think, is my number one concern. And
I understand. Can I hold on 1 second? Because I'd like to ask Lynn, if we made such a change, would that be, because it's in the regulations, would that warrant, a new introduction, or could we just make that change? Because I don't think it's necessarily in the ordinance, or even if it was mentioned in the ordinance, is that considered less restrictive or more restrictive, warranting a new public hearing?
Well, certainly if it's in the regulations only, we could continue and not have to have another public hearing on the issue. If it is in the ordinance, I think that would be considered more restrictive. So that may trigger the public hearing process.
I mean, I certainly don't want to overstep my bounds, but I'd throw that out there as a concern for further discussion among mayor and council, that sort of nightmare scenario where we are getting more housing that schools can't afford without the ability to capture the value. The other question is a little bit more broad about the impact of these fees on overall affordability. We had a lot of discussion in the Lake Forest Master Plan process about missing middle, about trying to encourage these affordable but not officially affordable, housing, market rate affordable housing that's not, part of an MPDU program. When you're looking at things like the missing middle housing or whatever we ended up, I forget what term we ended up calling it, have we looked at what sort of impact these fees would have on that type of housing? And I understand we need to fund schools, but it seems to me that these fees in general do a great service to the schools in managing development, but they do a disservice to some of our other competing priorities of encouraging more affordable housing. So has there been any sort of analysis about what the impacts would be on those situations that we're trying to encourage?
So potentially, yes. Chris, if we could go to the additional back pocket exhibit that I provided this morning, I think this may lend it context. So staff assumed a question like this was going to come up, or along the lines, well, what can you actually generate? So what we did was we went to a past project that's on the east side of town that reflects a lot of the development we think we're going to see going forward. So we chose Fairfield at West Deer Park, which was approved in 2006. And it's served by Rosemont, which is a tier 2, Forest Oak, no tier, and Gaithersburg High School with the tier 1. Development-wise, Commissioner Wessel, 334 multifamily units minus the 50 MPDUs, 284 would be subject to the fee. 53 townhomes minus 4, 49. But to your missing middle sort of question is the 2 over 2. So they were 28 minus 2, so it's 26. So this gives you the layout. So this is, a lot of the development we'll see going forward. The next slide, please. Next page. So if we did it based upon the methodologies we showed and the current things, this breaks out how it would be charged. And you are correct that it's not cheap. The attached, because 2 over 2s under the county are considered like townhomes, for Rosemont, it's an additional $6,000 above the impact taxes per fee. So, all told, this development, if built today under this regulation, all told, would almost have to pay $1 million. But related to Gaithersburg High, it's almost $400,000. And again, the $1 million for Rosemont. So I understand what the issue is. This is a competing policy. So that's why we sort of wrote that first condition that you can seek a waiver based upon county council policy priorities. We have the findings. The findings are restrictive, but as I mentioned, we wrote those most restrictive that if, in discussions with Planning Commission and Council, we want to loosen those up to allow this policy balance, be it for missing middle or something like that, potentially we could do that in the ordinance without need of, coming back for a public hearing. Kirk and I drove ourselves crazy thinking of all the crazy hypotheticals that come out with this. There's always going to be an oddball. This is why some of the stuff we did is regulations, because it'll be easier to change over time to address new conditions that come up. We were asked, well, what happens if there's a new boundary survey? We don't know. This is the challenge of how we deal with some of these. But building in Montgomery County, as we all know, is expensive. So it will be. I think the only advantage is that we know is that MPDUs must be exempt. So, as we have more MPDUs, that will help offset some of this.
And Rob, I'd just like to add that, when the county redid its growth policy, one of the things that came out of it was this idea of trying to lower the overall impact taxes at the county level, because they felt, it was tied to 120% or whatever of a seat or whatever it was. So anyway, at the end of that process, the impact taxes actually were lowered generally compared to the previous ones. And so one of the ideas that the county had was this up fee to try and address overcrowded schools and then add it back. So we didn't really do that analysis, but we could certainly provide that, to you in a future packet to show what the difference is before, under the old flat rates of impact taxes versus the new impact taxes plus this fee. Because it may be that they're very similar in the bigger, once you add them together, or they could be slightly more. But we believe that the overall impact is lower, at least for certain types of units, like multifamily units, for example. Those were significantly reduced for the impact taxes compared to the previous growth policy at the county level.
And to follow up on that, Commissioner Wessel, I mean, I think some of these gap housing that we were talking about in Lake Forest, we have to really look and determine where they fit on this. Again, a quadplex, we would consider low-rise multifamily. See, as you can see on here, as opposed to a 2/2 or a town that pays $6,000, this pays under $2,000 a unit. So, and again, this doesn't differentiate between rental and ownership. It's all based upon the physical typology of the residential unit. So some of the things such as triplexes, things like that, we may be able to consider as multifamily low rise.
Okay, thanks. That was a good answer. I appreciate the information.
Okay, we're going to go to Rob Wu and then Ryan Spiegel.
Thanks, Mayor. I just want to see if Ryan wanted to chime in on that point. He seemed like he was chomping at the bit on that specific issue. And I defer to him if he wants to speak on that exact point.
Thanks,
Okay.
Rob. I appreciate that. It was actually in response to Commissioner Wessel's question. I just wanted to point out, I recall that when we were in the process of implementing the previous incarnation called the facility fee, that we did some outreach to the development community to try to at least anecdotally understand what kind of incentive or disincentive we'd be creating by implementing the fee. And the feedback we received was that, developers in the county had sort of again, already baked this into the cost of development everywhere else in the county, because the previous facility fee applied everywhere else in the county except Gaithersburg back then. And that the fact that we did not have a facility fee back then was not sort of on their radar screen as an incentive to come to the city for development. There were other incentives to come to the city for development, but that was not something that they thought about. Now, it's not a scientific poll, but I do recall that we did that outreach and that was sort of the sense from the development community. And I'll defer to staff if they have anything to add about that. But remember that for many years, the county had their facility fee payment, whereas while we did not. So I would imagine that both sort of the logic behind that would stay the same, but your point is well taken. And thanks to Rob for letting me chime in.
All right, thanks, Ryan. Go ahead, Rob.
Thanks, Mayor. It was a suggestion. Actually, the mayor has control over the meeting, and so he's the one who allowed you to comment. Question for Rob. Refresh my recollection. The county's student generation numbers are plugged in at final design, or is it at schematic, or what point are they baked in?
At the county development stage?
So we use the superintendent's numbers for student generation as a trigger for both our prescriptive APFO, but we're also, it sounds like we're using it as a metric also for this assessment of the utilization fee. So I'm just wondering, at what point does an approved development make it into that number?
So preliminary subdivision is when you start baking in student generation numbers going forward for enrollment.
Okay, and so
is that what you're asking, or are you asking when they applied their analysis?
The question is, at what point does for example, if we had Lake Forest, where say they come in with 1,400 units, let's say the student generation numbers for that are 500 students. At what point is that reflected in the superintendent's number that is then applied?
The following year's 5-year CIP.
Okay, but at preliminary subdivision or at schematic?
Yeah, that's when they start baking in, and there was discussions with MCPS. Probably, Kirk, you can refresh my memory, before the pandemic, because they were trying to figure out ways, was there a way to begin baking in sketch plans? And everybody agreed, it's too fluid. Those are difficult. So it's preliminary subdivision. We used to have twice a year meetings with MCPS. Once we have SDPs or preliminary plans approved, we do let MCPS know this so they can begin doing their long range analysis and hitting the student generation rates and baking in the numbers.
Okay. And so, you, I, and John have all talked about my heartburn about using a lagging indicator for future prescriptive ordinances. But it seems like, at least for the waiver, where you were talking about looking at the impact of that specific development on moving it into one of the a higher tier, that you are in fact considering a future indicator as opposed to a lagging indicator. Walk me through
So for that one, that I'm sorry, I didn't mean to interrupt. That is a unique situation, and that will be additional work on staff using the generation rates at the time. If somebody wants to put in for that in staff's analysis to provide to council in order for you to make the decision, that is the one case where we would try to extrapolate, in real time, sort of what the potential impacts would be. We're not going to wait 5 years to grant a waiver, a retroactive waiver. So we'd have to do something, but we feel that finding is very important, that it's worth doing the effort. We don't have the staff or the ability to accurately do it for every level of a school and every cluster, but for a specific waiver request related to one school, we can go through the academic exercise with the student generation rates to be able to determine for that specific, for the subject year, would it push up a seat deficit and the capacity to create a tiered difference?
Okay, because kind of following the line that Phil was getting towards is that at some point, if you use an earlier metric, it may not reflect the realities of the future approvals, and therefore you're not, in fact, capturing the true impacts. And so in my example, the heartburn that I have with the APFO cap is that, say, Lake Forest Mall, for example, where you have, say, 1,500 units coming in at once. Best case scenario, they all come in. You're not looking at the impact of Lake Forest Mall on the schools. You're looking at the impact on the schools at the time the Lake Forest Mall project is approved based on those numbers. And so you're not, in fact, reflecting in your capacity determinations that 1,500 units and the students that are being generated for it. And I understand, based on our discussions on the APFO cap, that's kind of difficult, but is there a way to bake in a later number into the fee assessment so that, for example, you have the approval at some point, those numbers get baked into the superintendent's student generation numbers, and then there's a second look down the line. So you say, for example, we're going to assess a fee at any point the superintendent's numbers until the shovel goes in the ground, goes above, breaks it into tier 1, tier 2, or tier 3, so that the fees are actually capturing the impact of the development.
So two things. When I mentioned the real world, it's still based upon 5 years in the future. Those numbers, the bumping a tier up, if we do the student generation, it's not going to be based upon enrollment today. It's going to be based upon the 5-year projection that we use to establish the tier anyway. So we're already looking ahead. So that's getting baked in there, just to be clear. I think I understand your question. I think the challenge is, and obviously I think we can amend whatever direction we get. What we were trying to do, what was again in response that we heard, throughout from development community like uncertainty, to continue to move the goal line over these larger projects we just have concerns about. Now, the only thing that would change over time with final site plan. So if you have let's use, even though it's not, applicable, Crown, which, had an SDP, but had multiple final site plans to build out that SDP over time. If there's certainty that you're paying for this school, you're going to be paying this percentage, the only thing that will change when you come in at final is the underlying cost, impact tax cost per residential type. So that is fluid. So we're not locking in that fixed, it's only the percentage rates and the tiers, because again, at preliminary subdivision, your student generation numbers are baked in for the 5 years out.
Yeah, no, I understand that. And so 5 years out, you when you're at final site plan, the houses that are going in, and the student generation numbers per house that the county is using, or the MCPS is using to assess that student generation rate. So it's not a difficult number to calculate. The problem is that it's not being captured and in the actual assessment of fees that are being when those houses are impacting the schools. And so it's not really I don't think a substantial impact if you have smaller developments coming in, because you're going to have incremental increases. But Lake Forest comes in and it substantially impacts the students that would be attending those schools. But if it's currently under the tiering system, we wouldn't be collecting those fees, even though there's going to be that student impact. And I'm wondering if there's a way to reflect the actualities of the student generation based on the developments in the way that we are calculating these fees. And ideally, the way we're calculating the caps too, but I understand we've had that discussion and the difficulties with that.
So I think I understand better now your question. So your actual question isn't that when a development comes in 5 years, it's at this tier. Your concern is that the potential student generation rates without seeking a waiver would actually push it into a higher tier. It's the actuality of the impacts as opposed to the theoretical response to the tier that's in place.
I think so. It's the fact that the superintendent's number that we use as our metric does not reflect the student generation.
So Lake Forest would come in and they would get stuff, but actually they would throw a tier 1 school into tier 2, but they're only going to be paying the fees based upon a tier 1.
Or not paying fees and throwing it into a tier 3.
Yeah, I understand what you're saying. This is another one, part of this ever expanding baldness is trying to think of these hypothetical situations and how to address them. So, I'm happy we can continue to look at this, but it begins to substantively change the process. Not that I'm opposed to this. Again, we laid out in many ways the easiest process, the most concise, but I think this dovetails in with Commissioner Wessel's statement too, that if it's a matter of time, we can relook at things at final site plan. It's just, staff would like clear guidance on what you'd want the clear assessment, what you would want the reassessment to include, to what purpose. And again, we have the possibility, because, and Lynn can chime in on this, if the discussion is from a procedural standpoint to do everything at final site plan, we can do that too, but it just takes out sort of the certainty for the development community. But we're amenable, it's not just amenable, this is a policy, sort of getting there. Obviously we don't have to have the answer tonight, but if this is some of the stuff you'd like, potentially, even though Planning Commission doesn't have involvement with regulations, but they do handle these plans, if you want them to debate some of these merits during their recommendation, and when we come back for policy discussion, I'm open to all of this.
Okay, great. You know my preference, and you are well coiffed, sir, so I don't think you have to have a concern. Thank you.
Okay, thanks, Rob. I think that's a really legitimate concern, and it'd be interesting to see how we can tackle that. I saw Neil's hand go up. Go ahead, Neil.
I'm not convinced you actually saw me raise my hand, but I'm happy to chime in. I just wanted to point out a couple of things. One is that according to the table that we saw, the impact tax per unit is actually a pretty small percentage of what the cost of a house is in this region. I think the number for a townhouse looked like $6,000, which is probably 2%. So as much as I would rather have better incentives for building more of the housing that we need, I think this formula, or these formulae, constitute a pretty fair balance of what we need, of not discouraging housing while encouraging the ability to build schools. And for the sake of our new members, and also for the general public who wasn't necessarily involved in some of the APFO discussions we had in the past, I mean, we've for a long time wrestled with the issue that we're not always, or often not, getting the school capacity that we need. In fact, it was recently brought to my attention by someone who's done the analysis that we have, on a per school basis, we have more portables than any other part of the county. So we're trying to incentivize in as many ways as possible MCPS to give us the school capacity that we need. So if we can provide money, that's a strong incentive to get what we need going. We've done other things too, including just talking to them a lot and letting them know what we need, what our needs are very specifically, so they could wire them in. So I think that I'd rather that the schools just came from the school ferry, but we have to do something to make them happen. So this seems like a good way to go. And hopefully the county doesn't change the rules again while we're still getting this going forward.
Thank you, Neil. Any other questions or comments before we go to the public? Jim.
I just wanted to acknowledge what Commissioner Wessel brought up about the possibility of an expiring plan, and the challenge of whether the landscape changes between the time that somebody gets something approved and then moving forward. Not that I think a developer would slow play something just to be able to get a break on future school development, but I think it's an important note. So I definitely would be open to exploring what needs to happen to make sure that we get that right. And I think Councilmember Wu also has a good point about just making sure that, if a development is going to take longer than that 5-year projection, just making sure that there is a mechanism to capture the actual value. Ideally, developments wouldn't take more than 5 years to come to fruition, but some of the larger ones could. And we want to make sure that the individual sections are broken down into those actionable pieces so that those numbers are reflective. What I would hate to see is, to Rob's point, something like Lake Forest. And I know we talked about it happening at the preliminary subdivision point. But if we're looking at that larger number and then the phasing just takes longer than the 5 years, then we could be in a situation where the tiers end up in a much more precarious situation and the developers not paying the actual rate.
Thank you, Jim. We'll go to Sharon Cantrell.
I was just going to say something very similar to what Jim had said and what Phil had said. I seem to recall we talked about Lake Forest Mall being done in phases, but the fees that are charged seem like they're binary. They're either charged or they're waived. So I just didn't know if we could consider in the future something that would either give some adjustment to the fees for some purpose, that we wanted to build, whatever our priorities are at the time. Because I think that there's kind of an open end there, Rob, with, the whole fluid, what are the priorities and matching that in terms of a waiver. Maybe there's a reduction considered for some priority that we've got instead of a binary yes or no. That's all.
Okay.
Thank you. Okay, any other questions or comments? We'll go to Lisa.
Thank you, Mayor. And Rob, count this as a newbie question. Is there a historical landscape that correlates new development to the tiers and seeing a tier increase or decrease based on new development that happens? Do we have historical information about that?
Not specifically through the city, but Kirk and I participated in the Montgomery Planning Stack Committee that led to the subdivision staging policy. And I think I understand your question. So I think the best way to answer it is what they found is student capacity, more or less, for the most part, really isn't impacted by new development. It's by transition of existing homes as it goes through the generational life cycle. And this is why, like, you see single family detached homes having the highest fees, where for years it was thought multifamily had the most kids. Well, it's actually single family detached. And it's a lot of areas of turnover. For example, here in City Hall, behind us, the Deer Park neighborhood, which has been in place since the late 1800s, early 1900s, has gone through, and for families, it's considered affordable housing. So when there's opportunities to move in, that's what's generating students. It's not necessarily when somebody comes in and builds, new construction. Now, albeit new construction does generate students, but the county's overall analysis countywide is most of the students, and when you look at what we talked about here, that it was Summit Hall Elementary, which is at 160%, there hasn't been new development in that school serving area in over a decade, and it's at 160% now. So it's from existing housing.
That's interesting. Was that was a note in your packet? I saw that somewhere. Now that
Which
the information that you just provided, I've seen it somewhere. Was it noted in your packet that
not the historic trends, but we can add something into the record for that, but we have in there, we have listed the schools and what are in tiers, and Kirk provided maps sort of showing where, from the county perspective for impact taxes, where infill versus stable communities are.
Okay.
And staff also does have the most recent superintendent's recommended CIP, which we could then add to show you what's going to change, because with Gaithersburg's a new elementary school being under construction, that and being assigned actually through the boundary study process, the new CIP actually reflects that new school. And so things are completely different based on that one versus this one. So all of the elementary schools you see in Gaithersburg being where they are in the tiers, they will basically go away next year. Once the superintendent's CIP becomes the educational facilities master plan CIP next July.
Okay, and one additional question. So if we, with Summit Hall as an example, if we were to do new development outside of that cluster, collect fees, we could not then use those fees for additional development for Summit Hall.
If it was not collected for a project serving Summit Hall, it could not be used for Summit Hall. Now, the interest earned in the dedicated account could be used for Summit Hall, but as expressed in Deputy City Attorney Johnson's memo, the nexus clause comes into play. If you collect money for Y school, you have to use it either on Y school or for another school that alleviates the capacity at that school. So you have to create that rational nexus. You can't begin to, collect money on the west side of town to use on the east side of town, unless there is a rational explanation that the development on the east side is alleviating the capacity for the subject school on the west side.
Okay, so we could still end up with a capacity problem for an area where we don't expect any new development.
Mm-hmm.
Okay, thank you.
That's the conundrum. We can only charge for new development, as Councilmember Spiegel said. We can't retroactively go back and begin assessing existing housing units. So again, this is the other challenge with this.
Okay, thank you.
Thank you, Lisa. Yeah, this is not going to solve all of the problems we've ever had, but it's something there to help. Do we have any other questions or comments before we go to the public? Not seeing any. Okay. This is the time that Mayor and Council and Planning Commission like to hear from anybody in the public who'd like to speak on this topic. We ask that you keep your comments no more than 3 minutes. If you have more than 3 minutes worth of material to deliver, send it. By all means, use your 3 minutes here and send us the balance in writing, and we'll consider it just like any oral testimony. We ask that you state your name and address or neighborhood if you feel more comfortable for the record. And just like with public comments, use the Zoom raise hand function if you'd like to speak. I see one hand raised thus far. Tech team, if you could bring up Dave Belgard, please. Dave, you know the drill. Just unmute yourself, state your name and address or neighborhood, and go ahead.
Thank you, Mayor. My name is Dave Belgard, Washingtonian Woods. One of the major themes in the last most recent city council election was increasing housing affordability, availability, and attainability. And I share some of the concerns that Commissioner Wessel brought up about this fee impacting that goal. Especially, and first of all, I absolutely understand that it's important to fund our schools. That's also something that was talked about during the last election, was ensuring that our public facilities and our schools are adequately funded. One of the things that I noticed, though, is that the fee applies as a dollar figure to each unit. So it's effectively a flat fee. Flat fees and flat taxes are commonly understood to be regressive taxes. They affect lower income people more than higher income people. And in this case, for example, if you have a residential unit that would sell for $100,000 and you pay a $6,000 fee on it, that's a 6% increase. A similar unit that would sell for $500,000 would get the same $6,000 fee. So that's having a larger impact on more cost-effective units. So I just hope the council considers that, maybe consider a percentage fee instead of a flat fee. One other thing that I'd just like to ask is I know that it was said MPDUs are exempted from the fee. Is there some sort of mechanism in place in the regulation that ensures that a developer doesn't get charged the fee for the MPDUs, but the price that is sold for does not reflect that lack of fee when compared to other non-MPD units? Thank you very much.
Thank you very much, Dave. Do we have any other members of the public who'd like to speak? Just use the Zoom raise hand function, going once, going twice. Okay, I don't see anybody else. Rob Robinson, I'm going to let you address whatever you'd like to address from Mr. Bellegarde's questions. I'm assuming that the tiers and the fees are really meant to mirror what the county has.
We're legally required, so we can't deviate from that. I wish there was a way we could check, but we don't control how a builder, what they sell their house for. That's beyond our purview. So we can't accurately say, oh, they're baking in this or they're not baking in this. What really comes down with MPDUs is offering price, which is mandated once again by codes and regulations. You know, it's a percentage. I understand the concerns. I think they are valid. Yes, technically, you know, some of these fees can always be used as regressive. I don't know how we would address that unless there was something, you know, the council and the planning commission came up with that said, I don't know, again, outside of MPDUs, how you begin, you know, determining exemptions unless it's, you know, following on some of the comments made, you know, do we just define certain house typologies and fully exempt them, you know, to try to encourage, you know, to Commissioner Wessel's thing, you know, the gap housing. These are options that can be explored. But aside from that, I don't know of a way because we don't set the markets. You know, that is what the real estate is. And, you know, housing costs are housing costs in Montgomery County. So I don't necessarily think, you know, we're going to see, you know, $200,000 single family homes anytime soon.
Understood. Anything, I see John Bauer. Go ahead, John.
I apologize, Mayor. I probably should have asked the question before the public testimony, but as more of the discussion was kind of rotating around, what about when the fees are assessed and when they're paid and based on what projections there are? It occurs to me too that one of the things in the regulation talks about refunding the fees to the property owners at 8 years. And I wonder if part of the bigger discussion, and I don't know, Rob, you can tell me where this belongs, but wherever the assessment is made and then whenever it's paid, is 8 years really enough, or is this part of a bigger formula about how the mayor and council, or whoever is going to administer the funds that have been put into escrow or, you know, account, whatever the mechanism is, has to look at the potential for a CIP budget in the county finally coming through and fulfilling the need for a school that may be 9 or 10 years out from when the fees are actually collected?
I understand your question. I think the challenge that we have is we can't go indefinitely. The 8 years is based upon case law and how this sort of got developed in a case in Anne Arundel County. Remember, it's 8 years from collection, which is at the issuance of building permit. It's not 8 years from final site plan approval. So
Okay.
again, as you're well aware, you can have a final site plan that has 100 units, but the first stick is only 8. So when those come in, the 8-year clock starts for those 8. It doesn't start for the full 100.
Okay, fair enough. Right.
Obviously, and with the lag, as we look at things, again, when they begin baking in numbers at preliminary subdivision, you know, one would hope it's on the school's radar, hey, we could have a problem here, that they don't wait, you know, 6 years after, you know, we've collected money to go, maybe we should do a project. Again, you know, we can only address procedurally what we think we can address. We can't drive other agencies on how they do stuff. We like to coordinate, we like to be rational, and we like to work within the legal framework that we've sort of been handed to sort of get this. but again, I think there's valid points, expiration dates, things like that. That's why, one of the things that came out of the work session was, hey, if there isn't a project within 6 years that's construction, potentially, using the council's discretion, if they want to use it for portables for that school or for project planning for that school, they can. We just don't want to default to that up front. Let's let MCPS try to find a construction solution first before we refund the money.
All right, thank you, Rob. So in terms of guidance, I think the two most salient points here belong to Phil Wessel and Rob Wu in terms of if there are ways to make adjustments so that we're using as accurate a future projection number in assessing this fee as we can, and not, finding some way not to allow time lapse to people play games with that. Other than that, Rob, do you feel guided here?
Yes, I think, again, I think you sort of mentioned, I think as we, should the records be adopted, a lot of the stuff that we're talking about is a regulation, which, upon Lynn's discussion makes me happy because it doesn't warrant another public hearing. I think we have the opportunity to do tweaks. I think the big thing is really let's explore for staff sunset clauses before we go there, and potentially the pluses and minuses of changing the process and maybe, not establishing stuff at preliminary subdivision, but rather to Commissioner Wu's point where I think he was leading, sort of do everything at final site plan, where it's a more accurate reflection of the 5 years coming up, as opposed to, what could be 2 years in the past.
Great. Okay, so then let's go to recommendations. John.
All right, thank you very much, Mr. Mayor. Planning Commissioners, the staff recommends that the Planning Commission hold their record open until 5 p.m. Monday, January 10th, 2022, that's 35 days, with anticipated recommendation on January 19th, 2022. Is there a motion, please?
So moved.
Second.
Is okay. It's been moved and seconded. Let me do the roll call. Commissioner Hopkins.
Aye.
Commissioner Wessel.
Aye.
Commissioner Cantrell.
Aye.
And I'll vote aye as well. That passes unanimously. Mr. Mayor?
Okay, and our recommendation is that Mayor and Council hold our record open until 5 p.m. Monday, January 24th, with anticipated policy discussion on February 7th, 2022. What's the pleasure of the council? Ryan.
So moved.
Neil.
Second.
Okay, I will call the roll. All those in favor say aye. Any opposed say nay. Council Vice President Harris.
Aye.
Councilmember Henderson.
Aye.
Councilmember McNulty.
Aye.
Councilmember Spiegel.
Aye.
And Councilmember Wu.
Aye.
All right, carries 5-0. Our record will be open until January 24th. Thank you all very much.
And then we need the separate motion for the introduction of the regulations.
Are we doing that right now? That's
Yes.
later in the agenda, right?
We moved it up to consolidate everything because it all dovetails.
Oh, okay, got it. Okay, well then, would someone like to move to introduce? Ryan.
I move introduction of the regulations.
Okay, Neil.
I second the introduction motion.
Okay, then we'll call the roll. Council Vice
Mr.
President.
Mayor, sorry to interrupt, but under section 2-10 of the city code, the mayor and council may but are not required to hold a public hearing. So the motion should include whether or not the mayor and council want to hold a public hearing on the regulations.
And given that
so staff's recommendation, I'm sorry, Mayor, staff's recommendation for this, and I'm getting to the page.
Page
It was
230.
staff recommends the council approve the introduction of the draft regulation without need of a public hearing and accept comments until 5 p.m. Monday, January 24th, with final action vote February 7th. And if that helps to read, it's on packet page 230.
Yeah, I'll with the mayor's permission, I'll just amend my motion accordingly.
Okay, and Neil, you're still seconding. Okay, all right. Then I will call the roll. Council Vice President Harris.
Aye.
Councilmember Henderson.
Aye.
Councilmember McNulty.
Aye.
Councilmember Spiegel.
Aye.
And Councilmember Wu.
Aye.
Okay, then consider it introduced. Thank you all very much. Next item on our agenda, planning commissioners, we thank you all and wish you all good night. And our next agenda item is from the mayor and council. We're going to start with Council Member Wu.
Thanks, Mr. Mayor. Don't have much to talk about tonight. I will note the advent of my favorite time of the year, the holiday season, with quite a few events, including a wonderfully robust Jingle Jubilee this year. I was very impressed by the number of various activities, and so were my kids. Various other activities we've taken part in that I just want to say thank you to staff for the wonderful times. The meeting Santa at the Kentlands Mansion, we all enjoyed it, as well as the Winter Lights Walk, another fine event. It's really those events that I gauged the beginning of the holiday season, as well as the appearance of Councilmember Spiegel's jacket, and which is splendiferous in and of itself. With that, I hope that everyone had a meaningful and happy Hanukkah, and then looking forward, a very wonderful rest to our holiday season.
I just muted myself before I spoke. Appreciate it, Rob. We're going to go to Ryan Spiegel.
Thank you, Mayor. I will echo Councilmember Wu's fine comments about the Jingle Jubilee and appreciating all of the new displays and new presentations by staff and vendors and volunteers, sort of expanding our celebration of the diversity of the city during the holiday season. So thanks to all involved in that. And I think we should keep that up. Just a couple of brief mentions of other events over the last couple of weeks. Mayor and council attended a training refresher for those of us who've been on the council, and training for our new members on ethics and open meetings on November 29th. On December 2nd, the farmers market at the Casey Community Center hosted their winter market, and I know that the mayor participated in the judging of the cookie contest. And I was able to stop by the market, and it was a very nice event. I am continuing to participate in a working group with elected officials and local government attorneys and other staff in coordination with the Maryland Municipal League and the Maryland Association of Counties, working on recommendations to the Office of the Attorney General on how to disseminate funds from the national opioid lawsuit settlement. I was not able to make one of our meetings today, but have made a number of the meetings over the last several days and weeks. Lynn Board, our city attorney, has been very active in that effort as well. Salute her involvement. I am hoping that as we run up on a January deadline in relation to the national settlement terms, that we will reach an agreement between MML, MACO, our member governments, and the Attorney General's office on an equitable way to distribute the opioid settlement funds to our communities in order for us to maximize the impact of those funds. So stay tuned. We have a number of upcoming events, some virtual, some in person, for legislative briefings and annual dinners with chambers of commerce and the like, and I'm sure we'll report on those after we've attended. Did want to mention that today was the first day of a special session of the General Assembly in Annapolis, where they are entertaining smaller set of items, including a congressional redistricting map, potential override of some of the governor's recent vetoes, and a couple other things. I think it's anticipated that this special session will last about a week, and then it will adjourn. And then, of course, the General Assembly will reconvene for their regular session in January of 2022. The city continues to be very involved in advocating to our friends at the state level for our priorities, and you'll hear more about that soon. I want to encourage everybody who hasn't yet had the opportunity, but who has the means to learn more about our city holiday giving program, which is a great chance to help families in need. The giving program in the past has collected physical gifts and other donations, but in light of the pandemic at the current time, I believe the city is only accepting financial donations, which can be made through our city website. If you go to gaithersburgmd.gov and search for holiday giving, there are some links in there about information on the program, how many years we've been doing it, how many families we can help. It's a really great program coordinated through our community services division. And in this season of giving, and given everything that so many families have had to deal with in the last couple of years, I really want to strongly encourage everybody to participate if you can, and make a donation to our holiday giving program. This is the last formal meeting of the year. We have I think another work session, but I think we have no formal meetings after this before New Year's. So I want to wish everybody a happy remainder of the holiday season. Merry Christmas if you celebrate Christmas. Please be safe at this time of year with New Year's and other celebrations. If you're going to drink, make sure that you have a designated driver or take advantage of Uber or Lyft or the Sober Ride program that's sponsored by the Metropolitan Washington Council of Governments. You can Google it. You can find it on social media. You can get, with certain limitations, you can get basically a free ride home. If you need it, you find yourself not able to drive home sober. So please take advantage of that. And Happy New Year, everybody. Thank you.
Thank you, Ryan. We'll go to Lisa.
Thank you, Mayor. Last week, I attended 2 trainings, one from the city attorney staff, which was a refresher for some, new for me, for the open meeting and ethics training. And also the planning team gave the newbies training on the planning sketch diagrams and SDPs and how that process works. And it was extremely helpful to learn those things coming in new. On December 2nd, attended the Montgomery County COVID-19 update. The county is doing well in terms of vaccinations. I think we're at 89% with folks with 2 shots. If there's still opportunities to be vaccinated, if you're not yet vaccinated, go to the county site and click COVID-19 to see the sites. There are sites all throughout the county where you can be vaccinated and stay healthy through the season. So I would encourage for everyone to do that. Also, this past Saturday, attended the Jingle, Jubilee, and tree lighting, which was had a great time. Stood in line to see Santa, but a bunch of kids in front of me. Couldn't get to Santa, but I did find the churros instead. So that was as refreshing. And then the lighting of the tree always is a fantastic event for the countdown and then the tree to be lit, even though you know it's going to happen. It's always very exciting to see that occur. And it was this past Saturday. And the cultural events, the different cultural events were fantastic. Saw a Native American dance troupe, a African drummer, and a Mexican dance team. All were fantastic, and that was very exciting. And I want to wish everyone in the upcoming holidays, those who celebrated Hanukkah, I hope you had a great festival. And for those who celebrate Christmas for the upcoming season, Merry Christmas. And I would like to reiterate what Councilmember Spiegel said in terms of the holiday giving. Please take time to go to the page and give what you can. We're still dealing with the pandemic, and some folks are still struggling through. So whatever you can give, please look at the holiday giving page and do that during this season. Thank you and happy holidays.
Thank you, Lisa. As a postscript to the holiday giving pitch you just did, I want to note that there are opportunities for people to volunteer with holiday giving in the distributions. There's going to be a couple different distributions. So if you're interested, the info is probably on the city website, but if you can't find it, just send me a note and I'll connect you with it. We're going to go to Neil.
Thanks, Mayor. I'm not going to reiterate a lot of the ground that others have covered. Hopefully everyone had a happy Thanksgiving. I had a very happy Thanksgiving to the point where I've been on a diet ever since, and I think it was worth it. Also had a very happy Hanukkah, and hope all those of you who celebrated did as well. And I managed to restrain myself on both Black Friday and Cyber Monday, so I'll declare victory on that basis. Really enjoyed some of the holiday events that my colleagues have discussed. Jingle Jubilee. I attended the first hour with my son. We didn't get to stay for the tree lighting, but we really enjoyed the various events and the performers. I attended the first night of Walk Under the Lights and got a chance to preview the winter lights. Hopefully you will have a chance to get a ticket and get out to see it because it's quite spectacular as always. And we also stopped by the Santa's holiday tour stop at the mansion just to check it out. Looked like a lot of families with very young kids were having a good time, and it was nice to see that that Santa was visiting various locations throughout the city to give everybody a chance to have their children come and say hello. And finally, we had Giving Tuesday to go along with Councilmember Spiegel's discussion of holiday giving. Giving Tuesday was a great event where various worthy nonprofits had a chance to ask for your donations. But it wasn't the opportunity to provide funding to the organizations that help the needy isn't only for that one day. So hopefully for those of us who have a little bit of extra cash left after our holiday shopping, we have a chance to take care of some of our favorite local organizations. And I'll give a shout out to a couple that I like. Manna, which not only accepts food donations, but accepts cash and will use that well to buy more food. And Identity, which serves some of the Hispanic and other youth in Old Town Gaithersburg. There are many others, and I apologize for not mentioning all of them, but we don't want to be here all night. But please take care of those who take care of others. Happy holidays, and that's it.
Thank you very much, Neil. We'll go to Jim.
Thank you, Mayor. I will add the St. Martin Food Pantry across the street from City Hall as well to the list of worthy agencies that are definitely helping during the holidays. I feel like I should pull a Rabu and just say ditto because I've been to many of these events as well. Jingle Jubilee is always wonderful. It's been something that my family has attended for many, many years here in the city. So it was quite a treat to be able to participate as a member of the city council. I also want to say what a treat it is to be able to go through all these trainings with my fellow newbie, council member Henderson. It is rare that you have two new council members over the past few years going through all of these new things. So it is nice to have a partner and being new together and ask questions. So, and thank you to the staff and for all of the work that you've put in, and to Tanisha for really, having a plan to make sure that we get up to speed as quickly as possible. It's a luxury that I don't think many people get. So thank you for that. I also want to echo the caution from Councilmember Spiegel about just being safe during the holidays. We had a tragedy here in my neighborhood, losing someone from a family who's been in our neighborhood for a long time in a fatal crash. And my condolences go out to the Ghosh family on your loss. It is incredibly important to enjoy the holidays, but enjoy them safely. And please take advantage of the resources that are out there. And I do want to, I just want everybody, as you're looking towards the new year, we always talk about resolutions, and I always encourage my family, encourage people in the support group that I run, just think about, be intentional about what you want to do for the next year, whether it's volunteering, whether it's, the diet that Councilmember Harris has been on since Thanksgiving, which I need to be on as well. But I just want to wish everybody happy holidays and a happy new year, and look forward to serving this community over the next year. And I hope you enjoy a good holiday season with your family.
Thank you so much, Jim. I want to just echo everything everybody said. I loved everybody's remarks. One, I want to just go a step further on Jingle Jubilee and give an extra special shout out to Sheila Bully from our staff, who did, I think so far as I understood it, she was the one in charge. The buck stopped there, and she did a really great job, as did everybody from our arts and events division. And I want to thank our Multicultural Affairs Committee for helping with the programming of the different performances that were there that night. And I want to join everyone in hoping that everybody had a happy Hanukkah, and wishing everyone a very Merry Christmas and any other holidays that you celebrate, as well as a Happy New Year. I feel like we sort of got a collective great Hanukkah present from the Quince Orchard Cougars. For those watching very closely, you might have noticed this prop here on my desk, a QO hat, and I want to give us very, very, very special shout out to the Quince Orchard Cougar football team. And Lynn Board and Lisa Henderson have been with me the past few games, enjoying what has been a perfect season. It's kind of a rare thing. It is a very, very rare thing. But the Quince Orchard Cougars football team won the 4A state title and completed a 14-0 season on Friday night. And it culminated in the final against Dr. Henry A. Wise Junior High School of Prince George's County. QO and Wise, like this is the matchup you dream of, because really over the past 12 or 15, almost 15 years, these are the top two programs in high school football in the state of Maryland. In fact, from the year 2015 to last Friday before the game, Wise came in there with a record of 76-1. That's 6 years where they've lost one game. And in fact, none of the kids on the Wise team coming into the game Friday had actually lost a game. That's how good that program is. And because QO and Wise play in different counties, the only time they can ever meet is in the playoffs. This is the 5th time in the last 12 or 13 years that they've faced off. Wise won the first 3 of them. They were all in state finals, and then QO has won the last 2. It's pretty amazing whenever that happens. So now over the past 6 years, Wise is 76-2, and both of those 2 losses came to QO. But they're a terrific. Wise is an amazing team and a very, very worthy rival, and I couldn't be more proud of our Quince Orchard Cougars. They just did a masterful job. So I want another quick note as we head into the new year. The Gaithersburg Book Festival is shaping up, and if you go to the Gaithersburg Book Festival website, you'll start to see some of the authors now that are going to be coming in May. Assuming all goes well and we have an in-person festival, we are proceeding as if we will on May 21st. You can find everything you need at gaithersburgbookfestival.org. And I will note that we do have a work session next week at which we will receive briefings from the Economic and Business Development Committee, the Cultural Arts Advisory Committee, the G-Park Committee, and Multicultural Affairs Committee. That will be Monday, December 13th, 7:30 p.m. However you're watching us now, you can watch us then. And you can participate in the Zoom if you go to gaithersburgmd.gov/virtual, and you can sign up if you'd like to participate on the Zoom. We will not have work sessions or meetings on December 20th or the 27th due to the holiday season. So the next regular meeting of the mayor and council will be on Monday, January 3rd, 2022. So again, that's why we're wishing you Happy New Year and Merry everything at this point. So I will move on from the city manager and turn it over to Tanisha.
Thank you, Mayor Ashman. I will be very brief because you all did an excellent job of covering all of the announcements. So thank you for that. And I would just add my well wishes
for a joyous, hopefully your holiday season is already off to an incredible start, and it will culminate with a really happy and joyous 2022 for everyone. So, thank you.
Thank you, Tanisha. And we will move on to economic development update. Tech team, if you could bring up Tom Lonergan, that would be great. Welcome, Tom.
Good evening, Mr. Mayor. Good evening, everybody. Just a couple of items for you tonight, recognizing the hour. First, as you know, the city's hotel market has been particularly hard hit by the COVID pandemic and its associated restrictions on travel and gathering. Thankfully, we do continue to see evidence that we are beginning to turn the corner. In October, the city's average hotel occupancy rate for its nearly 2,000 rooms rose considerably to 62.3%. up from 33% a year prior. It's above the countywide average of around 58% for the month, and it's up 8% just from September, when the occupancy rate was just over 54. The improvement in occupancy levels is outpacing our earlier assumptions for how long it would be before we saw 60% occupancy levels in the city, and we are getting closer to the more normal 70 to 75% occupancy rate we typically see here in the city during the fall months. Average daily room rates are also on the rise, hitting an average of about $108 a night in October, which is only slightly less than the rates we saw in pre-pandemic 2019. So, in 2020, the break-even occupancy for the average full-service hotel dropped from 47% to 30%. During the height of the pandemic, our hotels were averaging monthly occupancy rates of 25 to 30%. We'll have to see how or if the Omicron variant of COVID once again impacts travel and demand for hotel rooms, but right now we are headed in the right direction. Just want to thank, as always, our friends at Visit Montgomery for their partnership and support for our local hotel operators. Secondly, Mr. Mayor, at long last, the GSA auction of the former Nike missile site has closed, with the top bidder, only known right now as bidder number 7, committing to just over $12 million. In all, the auction attracted 11 bidders. Activity began on August 26th, with an opening bid of about $2 million. With the original deadline at the beginning of September, each bid extended the cutoff by 24 hours for more than 12 weeks, attesting to the strength of the local commercial real estate market. Like I said, we don't know yet the winning bidder's identity or their intentions for the site, but we will continue to keep you posted as more information becomes available. That's all I got tonight, Mr. Mayor.
Thank you so much, Tom.
Thank you.
So the next item we have on the prepared agenda was the introduction of the APFO fee regulation. But since we took care of that, we're moving tech team. If you could bring up Sean Stevens from our Public Works Department to talk about the contracts for provision of road salt. And we have Mark Stafidi as well. Sean, welcome. Go ahead.
Good evening, Mayor and City Council. The resolution I bring before you tonight is to authorize the city manager to enter into primary and secondary contracts for road salt provision services. The Department of Public Works requires provision and delivery of Type 1, Grade 1 road maintenance salt. Public Works wishes to enter into primary and secondary contracts for these goods and services. For the primary contract, Public Works wishes to utilize State of Maryland BPO with Morton Salt Incorporated for the provision and delivery of Type 1, Grade 1 road maintenance salt. For the secondary contract, staff requested quotes for the provision and delivery of the salt from other companies who bid on the state contract. Eastern Salt Company Incorporated was the low quote for secondary provision of road salt. Staff recommends award for primary provision to Morton Salt Incorporated in an amount not to exceed $95,520 annually, and award for secondary provision to Eastern Salt Company Incorporated in an amount not to exceed $29,640 annually. The contracts will be for FY22 with 2 automatic 1-year renewals for fiscal years 23 and 24 respectively. These renewals will be subject to fiscal approval. The total duration of these contracts will not exceed 3 years. There are sufficient funds in the operating budget. Do you have any questions for me?
Thank you, Sean. Questions, comments? If not, would someone like to move the resolution? Rob Wu.
Thanks, Mayor. Question, I know we've had this discussion in the past on toxicity of road salts and alternatives. What's the type of road salt being procured?
It's type 1, grade 1. It's natural salt of the earth. There is an additive in there to keep it from clumping so we can run the salt through our salters. But other than that, it's untreated salt.
Sodium chloride?
Yes.
Okay. It could be potassium chloride too, I guess.
No, it's sodium chloride, sir.
Okay. And by the way, I was very impressed by the programming this past weekend on the road salts and at various facets, but I'll move the resolution.
Okay, thank you, Rob. Jim.
Second.
Okay, we have a motion and a second. I'm going to call the roll. All those in favor say aye, any opposed say nay. Council Vice President Harris.
Aye.
Councilmember Henderson.
Aye.
Councilmember McNulty.
Aye.
Councilmember Wu.
Aye.
And Councilmember Spiegel.
Aye.
All right, carries 5-0. Thank you very much, Sean and Mark.
Thank you.
Tech team, if you could bring up Kevin Roman, please. Next on our agenda is the introduction of an emergency ordinance regarding rent increases during the COVID-19 state of emergency. Kevin, welcome.
Good evening, Mayor and Council. Before you tonight, we have an introduction of an emergency ordinance to amend Chapter 13 of the City Code entitled Landlord-Tenant Relations by amending Section 1313A entitled Prohibited Rent Increases During a COVID-19 State of Emergency. In the way of background, back on July 20th of 2020, the mayor and council enacted an emergency ordinance that provided protections from residential rent increases during and for 90 days after the state of emergency declared by Governor Hogan. The enacted ordinance prohibited residential rent increases above Montgomery County's voluntary rent guideline, which at that time was 2.6%. Currently, that rate has reduced to 1.4%. The voluntary rent guideline is generally set in February of each year and is determined by the residential rent component of the Consumer Price Index for the Washington, D.C. region. Additionally, the emergency ordinance prohibited certain notices of rent increases to tenants and also required a landlord to provide a tenant a notice to disregard any rent increase notice that was given in violation. The emergency ordinance is set to expire and have no further force or effect on the 151st day after the termination of the state of emergency. And as we know that the state of emergency was lifted on August 15th, 2021 of this year. Therefore, the rent stabilization protections in the ordinance expired on November 15th. And the emergency ordinance being section 1313A is set to expire and have no further force or effect after January 15th of 2022. Accordingly, the draft emergency ordinance before you tonight extends the previous protections on raising rents above the voluntary rent guideline until May 15th, 2022. It also requires landlords that may have issued a notice of a rent increase above the voluntary rent guideline after November 15th of this year to notify the tenant to disregard such a notice. The goal of the ordinance would be to help tenants stay in their homes while recovering from the economic impact of the pandemic by alleviating additional financial strain a rent increase would cause. The ordinance would only apply to residential tenancies at lease renewal. It will serve as a temporary protective measure that would expire and have no further effect after May 15th, 2022. With that said, we are requesting that the mayor and council vote to introduce the emergency ordinance. And if sponsored, notify the public of the scheduled public hearing and policy discussion tentatively scheduled for January 3rd of 2022. And with that, we'd be happy to answer any questions.
Thank you, Kevin. Before, Ryan, I see your hand, but before I see Tawana's on screen too. Tawana, was there something that you were adding to this as well, or you just here sort of monitoring?
I'm just up here in Jason, just in case there's questions that I have to cover. I'm a backup for Kevin.
Gotcha. Okay, thank you. All right, go ahead, Ryan.
Thanks, Mayor. Kevin, as I understand our current temporary limitation has a provision that basically says it expires at a certain point, but then there's a 60-day grace period after that, during which, even after the expiration, that an increase can't take effect. Is that right?
Yeah, the rent stabilization protections actually expired on November 15th, and that was 90 days after the governor left the state of emergency. So in the city of Gaithersburg, a notice of rent increase is required 60 days. So you add the 60 days on to the end of the 90 days after the expiration, and that's where you get the 151 days. And that's why the emergency ordinance would extend to January 15th of 2022.
So it would extend it to January 15th. The May 15th date, I guess what I'm asking is the May 15th date. Is that May 15th plus 60 days, or is that just May 15th?
It's just for this new one that we're proposing tonight, I'm sorry, is just May 15th. There would be no extension.
Got it. Just wanted to clarify that point. Thanks.
Okay, we'll go to Rob Wood.
All right, thanks, Mayor. Thanks, Kevin. When staff had reached out on this resolution, I'd raised the issue of whether we would consider legislation that I'd seen in the news on other jurisdictions that would require an application by a landlord for rental relief prior to enacting an eviction against a resident. Was that researched or considered at all, or is that coming, or what's the status on any of that?
That would require a landlord to apply for rental assistance?
Correct. So certain jurisdictions are adopting essentially a moratorium on evictions to stem the impacts of reduced incomes and the impacts of COVID by requiring landlords to make application for any available rental assistance programs prior to being able to enact an eviction against a resident faced with that situation. And so I'd asked, I think it was Tom who had called about this and suggested that be interested in finding out more information about that. And because it was tied to this request, I was wondering if that was given any consideration.
Yeah, I don't know if we would have the ability to require the landlord to apply for the rental assistance. But Lynn may want to speak on that behalf.
Yeah, if I can jump in, because Tom did ask me that question, and in Maryland, evictions are governed by state statute. So I don't know that we would have the authority to implement any restriction that would be contrary to the existing provisions in state law.
Okay.
Thank you, Lynn. Rob, go ahead. I'm sorry.
All right, I was just going to say the I don't know. Does that mean that it begs further research, or we're just preempted?
I mean, we would be preempted from adopting anything that would conflict with state law.
Okay.
Okay. Any other questions or comments? I'm not seeing hands. I'll just note that I am, just as a matter of principle, generally very reticent to get involved in, rent, what could end up being rent control. Although this is obviously just a very temporary measure. It attempts to sort of micromanage the market have unintended consequences. And I'm sure all of us could agree we want to have affordable options for everybody, and we don't ever want to see people being evicted. That's true, but sometimes when you try to legislate things to micromanage the market and say, well, we're just going to cap what rent increases can be, there can be consequences about what initial rental rates are, as opposed to the escalations that rents in general can get higher. There can be other things that become unintentionally more exclusionary about what residents are eligible to rent, and the process and the initial costs for renting. I'm skeptical about these things, but this is only until May, and so if it's the council's decision to introduce, then so be it. Ryan, go ahead.
And of course, Mr. Mayor, it's only an introduction at this point. It's not the adoption.
Yes.
So given your comments and the other comments that have been made, I'll move to introduce.
Fair enough. Rob Wu.
Second.
Okay, I will call the roll. All those in favor say aye. Any opposed say nay. Council Vice President Harris.
Aye.
Councilmember Henderson.
Aye.
Councilmember McNulty.
Aye.
Councilmember Wu.
Aye.
And Councilmember Spiegel.
Aye.
Okay, carries 5-0. It is introduced. Thank you very much, Kevin and Tawana and Tom. And just get to the next thing, which I believe is Tom Lonergan. The loan extension. Yes, Tom Lonergan, you lead us in the discussion about the MHP loan extension.
It's actually Tom Lonergan and Sharon Disk, who in her role as acting housing and community development chief. So she should be joining me on screen here.
Excellent. Sharon, are you with us?
Hello?
Hey, Sharon, welcome.
Yes, do you see me? I do not see you.
We do not see you, but we hear you.
Let's give this a try. Hey.
Now we see you.
Yeah. Good evening. You have before you a resolution to extend 2 loans the city made to Montgomery Housing Partnership to assist with rehabilitation of aging apartments on North Frederick Avenue. Made in 2012 and 2013, the loans total $736,000. MHP completed repairs and some facade improvements, but the organization's longer-term goal was a larger renovation, now estimated at approximately $30 million. In the financing of the future project, MHP intended to repay the city loans. Delays with the new financing package have brought us here tonight. The loans are due at the end of this month, and MHP has requested an extension. Staff has verified with representatives of the various capital sources that they expect to finalize the transaction in the first or second quarter of 2022. Staff is proposing that payments of the smaller loan, $250,000, would be due June 30. The remainder, $486,000, would be due December 31, 2022, well after the expected closing. And Tom and I are here to answer any questions.
Thank you so much, Sharon. This makes all kinds of sense to me. I will pass it over to Ryan Spiegel.
Yeah, this makes sense to me as well. Thanks to staff for sort of explaining it, putting it on everybody's radar screen. And I'm going to support it, but I'm just curious, does interest continue to accrue as the period goes past the original due date?
Yes, it is paid twice a year.
Okay.
So we don't see great compounding with that calculation, but yes, the interest would continue.
Okay.
Ryan, would you like to move the
Yeah,
resolution?
if there are no other questions, I'll move it.
Okay, Jim.
Just one question, and it's I'm assuming that our expectation is that these will be paid in advance of these deadlines that we're setting once the financing comes through.
Yes, they would be paid upon the refinancing of the total project. And we expect that should happen well before June 30. We just don't want to keep coming back for extensions.
Okay, would anybody, we have a motion, would anyone like to second?
I'll second.
Okay, we have a motion and a second. I will call the roll. Council Vice President Harris,
Aye.
Councilmember Henderson,
Aye.
Councilmember McNulty,
Aye.
Councilmember Wu,
Aye.
and Councilmember Spiegel.
Aye.
All right, carries 5-0. Thank you.
Thank you all.
Thank you,
Thank
Tom.
you.
Thank you, Sharon. Appreciate it. Next, we have Lynn Board to talk about the Crown Castle and negotiating and license agreements and all that good stuff. Go ahead, Lynn.
Thank you, Mayor. In 2017, the city undertook a comprehensive review of its zoning ordinance. And with regard to small cell facilities and other installations in the public rights of way, as part of that process, we did adopt zoning ordinance changes as well as a very detailed and comprehensive regulations. So then in following that in early 2018, the city did adopt template franchise agreement and master license agreement for those industry partners who intended to come into the city to install these types of facilities. So we have since that time made some minor revisions to those templates based on federal communication orders that have come down since 2018. And also we wanted to ensure that all of the agreements that we enter into with our industry partners are non-discriminatory and provide the same terms and conditions for each of the providers. Since that time, we have entered into agreements with AT&T, and we currently have requests from Crown Castle to enter into master license agreement and franchise agreement. The agreements they have proposed are, largely in accord with the templates that the mayor and council have provided. There do need to be just some minor adjustments to those, really based on just some updates on some dates in it, and again, some minor adjustments to that. So the resolution before you this evening is to authorize the city manager to negotiate and execute a master license agreement and franchise agreement with Crown Castle. Carly Didden from Crown Castle is available should you have any questions specifically for them.
Thank you so much, Lynn. This seems like, even though this is the first time we've gotten to this point with Crown Castle since our, at least to my knowledge, since our passing our ordinance and our regulation, this seems to go right along with the work that we have set up. And so it seems good to me, but be interested to see what the council has to say. Any questions or comments? Rob Wu.
Thanks, Mayor, and thanks, Lynn. You know what question I'm going to ask, I think. Does this franchise cover the Crown Castle DAS facility that's installed currently on Great Seneca?
They would have to make application for that. Actually, it would not, because that is not in the public right of way. That's in an easement. So it would not be covered under this master license agreement.
Okay, but it's on our property. And have we
Correct.
determined that the Pepco easement allows Pepco to install cell facilities?
My interpretation of the easement that we did provide to Pepco, it would not be permissible.
Okay, so is that something that we could resolve as we're moving forward with this? Just for resolution purposes. I'm not saying one way or the other it's a bad facility or not. It's just, over the years, it's kind of been lingering in a status that is not quite resolved.
Yeah, we can certainly address that with Crown Castle. Our inquiries to date have been with Pepco, who has been largely non-responsive on the issue.
Okay, but now we've got a great franchisee in our city, possibly.
Okay, any other questions or comments? If not, would someone like to move the resolution? Rob Wu.
Not seeing any other hands, so moved.
Okay. Do we have a second?
Second.
Neil Harris.
I second the motion.
Okay, I will call the roll. Council Vice President Harris.
Aye.
Councilmember Henderson.
Aye.
Councilmember McNulty.
Aye.
Councilmember Wu.
Aye.
And Councilmember Spiegel.
Aye.
Okay, carries 5-0. Thank you very much, Lynn. Next, tech team, if you could bring up Sam Copeland, please. And we're going to talk, now we're in policy discussion, and we're going to discuss the Novavax SDP. And to our friends at Novavax, thank you for your patience. We're glad you're still with us. Sam, welcome. And welcome to you, Greg, as well. Sam, you can take it away.
Oh, I apologize. I was on mute. Good evening, Mayor and Council. Tech team, please turn to packet page number 383. Staff is before you tonight to present the policy discussion for schematic development plan application SDP-9003-2021. The presentation this evening will focus on the comments received during the joint public hearing, the applicant's responses to these comments, and a recap of the subject application. Next slide, please. The subject property, as shown on the monitor, is 9.66 acres and is zoned MXD. The property is addressed at 14 Firstfield Road and is bounded by Bank Street to the north and Firstfield Road to the west. Next slide, please. The applicant, 14 Firstfield Holdings, LLC, filed an SDP application on August 5th, 2021, requesting approval for the construction of a new campus for Novavax. The application is in conformance with the recently approved sketch plan SK-8813-2021. Specifically, the application proposes 604,929 square feet of lab/office, research and development, and integrated light manufacturing uses. The application also includes a request to modify the parking ratio at 1 space per 650 square feet. The applicant is of the opinion this parking ratio is acceptable for their need as outlined in exhibit number 63, which explains that 1/3 of Novavax employees will work on campus full-time, 1/3 will have a hybrid schedule, and 1/3 will work remotely. A joint public hearing for this application was held on October 18th, 2021, and 3 members of the public provided testimony during the course of the hearing. In addition to the testimony provided during the joint public hearing, testimony in the form of 2 emails have been received and are included in the records as exhibits 61 and 86. There are currently 89 exhibits in the record. The Planning Commission's record closed 5 p.m. on November 10, 2021. The Planning Commission reviewed the subject application during their November 17, 2021 meeting and recommended that the Mayor and City Council approve the subject application with the 3 conditions included in the staff analysis. I will note that condition number 3 was slightly revised by staff subsequent to the Commission recommendation to provide greater clarity, but the overall intent of the condition is unchanged. The Mayor and City Council's record closed 5 p.m. November 24, and no additional public testimony was received following the Planning Commission's recommendation. Next slide, please. During the joint public hearing, the applicant addressed a variety of the discussion topics, including campus security, loading dock management, stormwater management, and the project timeline. A supplemental response letter has been included which addresses comments not answered during the public hearing. The applicant's response letter can be found within the packet as exhibit number 63. I will not go into further detail on the applicant responses. One discussion point during the public hearing was the intersection of Street A and Bank Street and its potential impacts on the adjacent bank property entrance off of Bank Street. The applicant has continuously worked with planning and the Department of Public Works to ensure that the alignment is safe. Street A is separated approximately 50 feet from center line to center line from the bank parking lot curb cut. The applicant states that good visibility exists and that appropriate pavement marking and signage will be provided at final site plan. As noted, this is a temporary condition and will remain until the bank property, known as Block 3, redevelopment, at which time the street will be realigned with the existing median break and entrance to the Quince Orchard Plaza Shopping Center. The public hearing also had discussions about plantings used in the landscape plan and if there would be native species to benefit pollinators. The applicant's response is that the design guidelines include a list of native plant species that will be used in the final landscaping plan. Lastly, the applicant looked into a comment to provide shuttle bus service between the campus and nearby transit centers for employees. The applicant will explore this further during the final site plan, as at this time, the applicant will have a better understanding of their employees' home locations, commuting patterns, and transit needs. Staff is of the opinion the applicant has adequately addressed all comments received during the joint public hearing with a supplemental response letter in exhibit number 63. Next slide, please. All other aspects of the application remain unchanged. The project includes 3 structures, the 2 office lab buildings, front Firstfield Road. Parking for the project will be accommodated within a new 6-story parking structure, which has minimal frontage along Bank Street. All proposed streets will remain private and are in conformance with the city's road code. Next slide, please. 35% of the property will be green area, which exceeds the MXD zoning requirements of 25%. As shown on the screen, the design guidelines visually depict the use of space. Of note, the project includes a central green area that serves as the focal point of the campus with buildings located on all 4 sides. Next slide, please. As seen here, the applicant's elevations demonstrate how the campus buildings will be clad with colored glass, white brick, and perforated metal panels. White brick is a common building material of the Novavax building at 700 Quince Orchard Road, which is adjacent to the subject property. All of the proposed materials are permitted within the applicant's design guidelines. Additionally, a pedestrian bridge is proposed to connect the 2 buildings. Next slide, please. The parking garage will utilize patterned concrete and planting beds to enhance the elevations. As shown on the lower image, the parking garage has minimal frontage along Bank Street to minimize the visual impact. Next slide, please. Staff is supportive of the subject SDP-9003-2021 application. The ability to retain and grow a Gaithersburg company, Novavax, which is at the forefront in the battle against the current global pandemic, reflects a concerted state, county, and city effort. The proposed global biotech campus fulfills the true intent of the master plan for this area and addresses many more city policy priorities and growth sector projections. The applicant has proposed a sustainable, attractive, and well thought out development that will remain an asset for the city over the long term. I am happy to answer any questions that you may have. Thank you.
Thank you, Sam, for the presentation. Thank you, staff. We spent a lot of time when the SDP first came up and when the sketch plan came up, with thanking staff for all that they did to expedite, to meet the needs of the applicant, which have been substantial, and how well everybody's worked together to get this done. This by no means has been an easy thing to get done. There's been a lot of moving parts that people have needed to juggle, but at the same time, it's been speaking to the mayor and council and the staff that I've talked to, it's been a labor of love. This is a project everyone's really, really excited about. And I think tonight's a great night that the council here has an opportunity to approve this SDP. And so with that, this is policy discussion. So I'm going to open it up to council members who'd like to speak about how they're planning to vote tonight, or if whenever anybody's ready to move the resolution, we can get to that too. So who'd like to go first? How about either Rob, Ryan, or Neil, just because our new council members haven't done a policy discussion before. I saw Rob's hand first, then we'll go to Ryan. Go ahead.
Oh, sorry. I thought you were saying let Jim or Lisa go first because their first policy discussion, but I won't provide a lot to guide them as far as how to do a policy discussion, because I'm just going to say this is a no-brainer.
Okay, well, that's one way to do it. Ryan, go ahead.
Yeah, I mean, I was kind of going to say the same thing as Rob. I'm not sure this is the best opportunity to, play out how a more in-depth policy discussion might work, given that I think this is a no-brainer. And as you said, Mayor, we've already kind of vetted a lot of, both of our statements of support, as well as any particular issues, minor as much as they might be, in our previous discussions and in our public hearings. So, I mean, I think this thing is ready to go. I'll defer to others if they want to make any, actual policy discussion statements or have a chat, but I'm prepared to move this.
So Ryan, just move the resolution. Anybody who wants to speak on it will still be able to, but go ahead, move it.
Very good. I'll move the resolution approving SDP 90032021 with the 3 conditions as stated in the draft resolution provided by staff in our packet.
Okay, thank you. Neil, I saw your hand.
Yes, I'd like to second the motion.
Okay, before I call the roll, I want to give Jim and Lisa any opportunities to make any statements here. Lisa, go ahead.
Thank you, Mayor. I just want to say I feel very fortunate coming in on this end of it. So all the hard work that was done, and Jim and I get to celebrate and bask in the beauty of this. I've communicated with staff, and I am so impressed with this project, with the work that's been put in place, with the main campus, the aesthetics, the beautification that will bring to Gaithersburg, the fact that thought went into making it also walkable to retail at Quince Orchard Shopping Center. There's a range of salaries that will come into the city and available from management to administrative levels of employees. This is an incredible opportunity, and thank you to the staff, to the planning staff, to the city attorneys and staff, to all the staff that worked on this project and got us here to a point where I just get to vote on a resolution. So that's amazing. So thank you all.
Thank you, Lisa. And Jim?
And I will associate myself with those comments as well. Leading up to our election to the council, we talked a lot about Gaithersburg's, world-class biotech corridor. And this here will be really a crown jewel of that corridor. The design is stunning. The features, the quad. I've had the opportunity to attend a number of the hearings over the past couple of years and have been following this with great interest before I was even thinking about being on the council. And to be able to be here and I will be supporting the resolution is an honor, honestly. The investment that Novavax has made in Gaithersburg is tremendous. The jobs that you will be bringing to our city and just continuing to enhance our city's reputation in the industry. And of course, the important work that Novavax is doing to fight the pandemic. All wonderful things, and I'm excited to be here. And as both council members said, it is a no-brainer.
All right. Well, I'm optimistic about how this vote's going to go. We have a motion and a second. I will call the roll in the order I'm seeing you on my screen. Councilmember McNulty.
Aye.
Excuse me. Councilmember Wu.
Aye.
Councilmember Spiegel.
Aye.
Councilmember Henderson,
Aye.
and Council Vice President Harris.
Aye.
All right, carries 5-0. I think this is an enormous win for the city of Gaithersburg, and hopefully Novavax feels the same. And it's my understanding that the two representatives of Novavax who are in the attendee room may have a couple words to say. Tech team, can you bring up Matthew and Tarek, please, from the Novavax team? I hope they're still with us. Tarek, I see you guys coming up.
And Councilman, I'd like to thank you for this opportunity. It's been a pleasure working with you and the city staff on this, and I am delighted to see us here today. Matt?
Mr. Mayor and council members, yes. I mean, right now I have a smile on my face. It's been quite a journey over the past year and a half as we've developed the 14 first field through sketch and schematic. The amount of work, Mr. Mayor, that your team has put forth to help Novavax and assist in moving this is beyond recognition, and I thank you for that.
Well, thank you both. We're all super excited. So go forth and conquer here, make us a great campus, and save the world while you're at it too.
We will do that.
Excellent.
Thank you very much.
And thanks for staying with us this late. We appreciate your patience.
Absolutely.
All right. So with that, the next item, and Sam, thank you, and Greg as well, and all staff. With that, we're going to move on to our next agenda item is from the city attorney. Lynn, do you have anything for us?
And nothing further this evening.
Okay, and I don't believe we have anything, heard from Dennis earlier, we don't have anything from other staff. So I will remind everybody that we have a work session next week, December 13th, where we're going to be receiving committee updates. Then we have the next 2 weeks with no meeting or work session due to the holidays, and the next regular meeting of the Mayor and Council will be on January 3rd. Reminder that Winter Lights is open and is great, and make sure you get your tickets in advance because you cannot buy tickets on site. And happy everything, and we will see you all soon, hopefully in the community in person, and wishing everybody the very best. Let's do great things, Gaithersburg. We are adjourned.